Bloomberg News via Zoom from Washington, D.C., where we're going to talk about it's the economy, stupid. So we'll get into that in just a moment. But Jess, let's kick it off with you. We had a pretty strong rally, and yet what's happened? We've kind of run out of some steam here.
We are seeing stocks coming off the highs. And something that's interesting, I was looking at the volume for today. And so over the past 10 trading days for the S&P 500, volume is about 10% lower. And as you mentioned, stocks were higher, or a lot higher earlier, as far as just the prospects for maybe potential gridlock following the midterm elections. Also, we did see Treasury yields ease, so that was a big help, as well as the dollar. But now you're seeing that not quite as helping as much of the broader market, since it is a bit flat now. But still, I was looking at as far as when it comes to...
Although yields are still...
Right, still lower. If you're looking at the 10-year, I mean, it fell as much as 8 basis points today. Okay. So still, it's not like there was a dramatic reversal there in yields. But again, seeing sort of volume lights, kind of at least making some gyrations there for the markets. But again, when I'm talking to money managers, they're sort of, because Paul and I talked
a lot of kids off, right? Because
there are
like schools that right in New York, I think end up getting closed because they use them for voting polls. I know in New Jersey where I grew up, the school stayed open. But apparently in New York City, I guess the kids get the day off. So maybe there's a bunch of parents at home. Maybe that's why volume's light.
I mean, potentially, maybe that could be one of the reasons. But also, I think it has to just do what Paul and I have talked a lot about this week, as far as just the historical aspect of midterms, how typically it kind of doesn't matter who you're pulling data from, whether it's CFRA Research or the Stock Traders Almanac, how following midterms it typically bodes well for stocks. But when I've been talking to a lot of money managers, they've already kind of pointed out that even if there is, say, a Republican sweep, there already was a lot of gridlock in general with Congress, so they don't expect to see some sort of massive sort of rally following that. And I was talking
Didn't you think gridlock was the norm?
Yeah.
Well, hold on a second. Let's bring in Reed. Reed Pickard is U.S. economy reporter at Bloomberg News. She's got something on the Bloomberg, too, about what really kind of matters. What are the most important issues for midterm voters, Reed?
So polls heading into the elections have shown us that the economy and inflation are ranking really high on voters' concerns and higher than some of the other issues that are on the ballot this year. And when we think about what the economy looks like, it's really this extreme scenario where on one hand you have this really strong labor market where the unemployment rate is near its lowest level in decades. Employers continue to add jobs at a good clip, and wage growth has really been broad-based and especially helpful for lower income workers. But then on the other hand, you have the fact that the highest inflation in a generation has essentially, sucked the air out of the room. And so these rising costs from everything from, groceries to airline fares has really, weighed on Americans. So when we think about those wage gains that have come from this, great jobs market, adjusted for inflation, wages year over year are actually lower. So if you're a Republican running today, you're pointing at that horrible inflation. And if you're a Democrat, you're pointing at the awesome jobs market.
And it's interesting, Reed, we had Matt Winkler on earlier today. Matt Winkler is the founder of Bloomberg News, and he has got a fascinating column out there today. And he said, by just about any measure, the economy under Biden is better than any president other than Jimmy Carter. So the data's there, but I guess the question for the candidates is kind of which data you're going to focus on.
Exactly. And from the perspective of a voter, are you putting more value on the fact that you have a job right now and unemployment is really low? Or are you looking at the fact that the rising cost of gasoline, groceries, rent, and everything else is really weighing on you and your household?
Well, Reed, that's a good point. And, Jess, this is something we've seen throughout the corporate earnings season is that companies have to deal with those higher costs. And some have been able to pass it on to customers. Some have been able to, reduce costs elsewhere. But that's a real thing. And the longer that sticks around, that's where we get into the questions over valuation, certainly for the public markets, right, and equities.
Correct. And also the ongoing issue when it comes to margins. So that's slowly been spilling over beyond even just discretionary companies into communication services, staples, materials companies now. And Gina Martin Adams and her team actually had some interesting data where they were looking at the correlation between operating margins as far as how does that mean for this process when markets bottom. And typically right now the consensus for analysts, they're thinking that margins could bottom in the third quarter, but that continues to get pushed back. So even though that could potentially...
So in this past quarter?
Correct. But that doesn't mean there's going to be a dramatic rebound, because basically if you're looking at the estimates in Bloomberg Intelligence, they're basically likely staying flat until the second quarter of next year. So for her, in her mind, and her strategist, when I'm talking about Gina Martin Adams, they're thinking that doesn't necessarily bode well for the broader stock market because you need to see that swing higher. So say if we do see a rebound there and more broadly with margins, that bodes well for the stock market. But if you continue to see analysts keep pushing those estimates further and further back, that's going to be a challenge for stocks.
Yeah, don't forget, we're going to get an important inflation print.
Yes, we are on
CPI.
Thursday, right? Yep.
Yeah, so we'll get a little bit more in terms of how that's playing out. Jess Menton, thank you so much. Deputy Team Leader for U.S. Equities at Bloomberg News here in our Interactive Brokers studio. And Reed Pickard out there in Washington, D.C. via Zoom. She is U.S. economy reporter at Bloomberg News. Be sure to check them both out at Bloomberg.com for some of their stories dealing with peak inflation and also the U.S. economy on Election Day. All right, right now, let's get to world and national news. It's off, or we're going to stay with D.C. That's where Reed is, and that's where Nancy Lyons is in our D.C. newsroom. Hey, Nance.
Thanks, Carol. Voters are heading to the polls to decide who will control Congress for the next 2 years, which will also serve as sort of a report card for President Biden.
President Biden isn't even on the ballot, but with the economy at the top of voters' minds, he faces long odds of staving off a Republican takeover of at least one chamber of Congress. But the final outcome may not be known for days if races are as close as polls suggest. Democrats hope anger over the Supreme Court's decision to end abortion rights will drive women and younger adults out to vote. But Biden and the Democrats haven't come up with a unified message on inflation, which is by far the top issue for voters. In Washington, I'm Amy Morris, Bloomberg Radio.
Both President Biden and former President Trump made last-minute pitches for their parties late yesterday. Biden spoke at a rally in Maryland for Democratic gubernatorial candidate Wes Moore.
I want you to know we'll meet this moment. Remember, the power in America lies where it always does, in your hands, the hands of the people.
Trump was in Ohio to campaign for Republican Senate candidate J.D. Vance.
This is the year we're going to take back the House, we're going to take back the Senate, and we're going to take back America. And in 2024, most importantly, we are going to take back our magnificent White House.
Trump says he'll be making a big announcement a week from today. Well, there is a winner in the Powerball lottery, the largest ever at more than $2 billion. The winning ticket was sold in Los Angeles. So far, no word on who that person was. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. I think I have my
Kind of tangled up there in the microphone. So,
so let's talk about. Wasn't there a story? No, it was the guy over at Morgan Stanley, Wilson.
yes.
Who said if you start to see job cuts
Yep.
broadening out from beyond the tech space, right? We keep
Right.
seeing them. That's when maybe we're going to start then indications of maybe the market bottoming out, right?
Yeah,
Because
it,
companies
and
cut
you know, you
costs.
just look at the industry that near and dear to our hearts here at Bloomberg, which is the financial services industry, and obviously it's been a brutal year for their financial results as you know the markets have declined and not much underwriting. So Citigroup eliminated dozens of jobs across its investment banking division this week as deal-making slump continues to weigh on Wall Street's biggest banks. That's an article on the Bloomberg terminal today. As you can imagine, a very heavily read article here. The cuts impacted staffers globally within the investment banking group, which includes its capital markets arm. And that's according to people with knowledge of the matter who asked not to be identified because the information is private. That makes a lot of sense if you're in capital markets and you're not doing equity deals or debt deals.
IPO market,
IPO
M&A.
market, exactly. So what do you do? And you know your biggest cost there, aside from capital, is people.
Got a number for you, Paul. Investment banking fees at Citi, led by, of course, Chief Executive Officer Jane Fraser, plummeted 64% in the third quarter. Keep in mind, others have been in the space, rivals, cutting positions. In September, Goldman Sachs started its biggest round of job cuts since the start of the pandemic, while Royal Bank of Canada and Bank of Montreal have also reduced their headcount recently. I mean, if you don't have business, but I'm always amazed because, so this has got to be what, junior positions? Because the senior ones have relationships you probably don't want to
but
lose.
I suspect they're going to be kind of across the board. And this timing is not unusual. This is the time of year when they go through the review process and they think about their bonuses, which will be paid in February. So this is the time of year when they typically do it.
Like do a haircut no matter what.
Yeah, just kind of cull out some of your weaker people so that you have room to hire some new, fresh blood.
Right.
So that's kind of the timing there. But it's interesting here because you think about Citi. I used to work there. They are just so global, and they're in so many different businesses. I don't know how you manage it personally, and that's I guess, been part of the problem with them. So
Yeah, shares of Citigroup, by the way, they're just up about 0.3% in today's session. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Election day, we've got stocks higher for now, but it has turned choppy for NASDAQ. It was negative just a few minutes ago, back in the green though, up now by 4 points, little changed, up less than 0.1%. The S&P right now higher by just 6 points, up 0.1%. Keep in mind, the best level of the day, the S&P have been up by 1.4%. The Dow higher all day long, up now by 200 points, up 0.6%. 10-year yield 4.13% with the 2 2-year yielding 4.67%. Spot gold up 2.2% right now. The precious metal $17.12 the ounce, while West Texas Intermediate crude is down 2.5%, $89.44 a barrel. Stocks rallying as risk sentiment picks up, with investors eyeing prospects for gridlock from midterm elections. Lots of earnings after the close of trading today. Among some of the names we're looking for: the Walt Disney Company, News Corp, IAC Entertainment, and Akamai. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. We appreciate that. Boy, if you like politics and the whole political game, today is a day for you. Midterm elections, a lot of big key states have some very tight races. Balance of power in Congress hangs in the balance here, so a lot to really deal with today, tomorrow, and then probably for a few days after that. So that's why we are fortunate to have Joe Matthew with us. Joe Matthew is the host of Bloomberg Sound On. You can hear that weekdays at 5 p.m. Wall Street time on Bloomberg Radio. He joins us from the 99.1 studio in Washington, D.C. So, Joe, what's the race that you're really focusing on? I know there's a lot of key ones out there, and you can get pretty granular, but what's the one you're really focused on?
Well, you know, it's probably Georgia if I had to pick, only because of the prospect of a runoff. People talk about this red mirage that, you know, we'll see early indications that Republicans have won because of actual voting today. Then they start counting early ballots. It'll start taking another look with Democrats added to the mix. At least that's the theory. And maybe you get a call, you know, tomorrow or in the next couple of days. Georgia could be a month. This is so close, within a percentage point between Senator Raphael Warnock and Herschel Walker, that it may well trigger a runoff, and it's already scheduled. It's basically a month from today. If they each fall below 50%, and that is entirely possible. Unless one of these candidates gets more than 50%, this goes to a runoff. That means, because of all the other tight races, we may not know which party controls the Senate for a month. And you've got Donald Trump out there posting on social media today about allegations of voting machines not working and why it's going to take so long, for instance, a state like Pennsylvania to call a race. This could bring a lot of confusion to the conversation politically nationally, and a lot of uncertainty about who controls Washington.
Joe Matthew, welcome to the new normal when it comes to U.S. elections. But having said that, what things were done in advance, especially considering the last presidential election and the questioning about the legitimacy of an election outcome? What has been done to kind of prevent that from happening again?
Just a lot of warnings, really. Even President Biden was saying it at a campaign rally over the weekend, that it could be days, maybe weeks before we know the outcome of all these races. And it really, it's striking because of how many toss-ups there are. You know, in the House, the Cook Political Report has 36 toss-up races. We've got 4 at least in the Senate. Some would call it 8, depending on how you look at this. This country is divided right down the middle, and we've got a 50-50 split in the Senate. Just reminding us that there are, in fact, 2 Americas when it comes to politics, and that's a big reason why it's going to take us a while to find out who won a lot of these contests.
All right, so they're close race, but how much of it, too, Joe, has to do with early voting, right, and counting those votes? How much is it just the logistical way our elections are increasingly being done?
Yeah, and that's why I referenced that red mirage. You've got more than 40 million people, imagine, who voted early. We've never seen that in a midterm. That's more than we had in 2018. And some states, like the aforementioned Pennsylvania, they don't start counting those until today. So, you know, when the polls close at 8 o'clock in a state like Pennsylvania, they start counting the people first who voted on this election day, and then they start moving to those early ballots. And that's why, you know, Carol, this could take not only hours, but possibly days with some of these races that are that close, because it could require counting all of them. You know, typically you hear projections, that you're watching election coverage, and they say the Associated Press is prepared to call a race. That's based on a projection. That doesn't mean all the votes have been counted. And this is one of those elections where we really may need to count far more votes than usual to find out the winner.
So, Joe, heading out west to Nevada, I understand that's also a competitive state out there.
Oh, for sure. That's a Senate race that we'll be watching very closely. Catherine Cortez Masto, the Democratic incumbent, is considered one of, if not the most vulnerable Democrat in the Senate. And look, you know, this is another one that could go late into the evening. The polls close in Nevada pretty late, and we could wake up tomorrow morning without knowing exactly who won. Nevada's an interesting one, though. You've got a lot of money coming in from out of the state, and in a very close contest with Adam Laxalt, the Republican who is running to unseat Senator Masto with the support of Donald Trump. And that's one thing we We haven't explored too much here in this conversation, but the Trump effect is very real, with almost 300 so-called election deniers on the ballot tonight.
Right. And, we often talk the headline elections, right? Top of the ballot, if you will. But I think about the state attorney generals. I mean, these are all crucial maybe especially when it comes to the presidential elections in 2 years.
It's really important that you're going there, and I would urge you to look at these races tomorrow and in the days ahead, Carol. When you look at a state like Arizona, where you've got the potential Secretary of State and a potential Attorney General with a governor, all of whom refused to accept the results of the 2020 election, all of whom have been endorsed by Donald Trump. The idea here is not only could it make a little bit of concern in the 2022 midterms, but this is the foundation that's being built for the 24 election. These would be the people in charge of election architecture, potentially for the re-election of Donald Trump. And while he hasn't announced yet, it is widely expected that he will.
No.
So, Joe, what is the feeling in D.C. about what we should take away from these midterms as we think about 2024?
Well, look, this is kind of a proxy. It's almost a preview, right? We've got Joe Biden on one side saying democracy is on the ballot, and Donald Trump on the other side, who seems to still think, although who knows what he actually thinks, that he won the 2020 election. And you've got, look, Governor Ron DeSantis is going to be reelected. It looks handily this evening. So it's going to give us some indications about 24, also in terms of what issues resonated. Remember, a couple of months ago, it was all about Roe v. Wade. It was all about mobilizing Democrats following the Supreme Court ruling. Not a lot of people are talking about that at this point, with at least in comparison to things like inflation, the economy, and the other drivers. Crime has been such a big one where you guys are in New York. Those will likely be a lot of the same issues we're dealing with in the 2024 election. Add a recession, and that's where it gets complicated.
Yeah, we just talked with Reed Picker, and it's the economy and inflation. And pretty interesting that we could see maybe another Biden-Trump matchup come 2024. All right, Joe Matthew, host of Bloomberg Sound On. Catch it at 5 p.m. Wall Street time on Bloomberg Radio, there from our studio in D.C. You are listening and watching Bloomberg Business Week.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening and watching Bloomberg Business Week on YouTube, on Bloomberg Quick Take, and certainly here in our interactive broker studio on Bloomberg Radio. So much going on. We're focusing on midterms, but man, there's stuff going on in the crypto world, Paul.
Stuff going on in the crypto world. I mean, Exchange A bailing out Exchange B.
Nothing like a crisis to make a party.
Nothing like a crisis. Yeah, so we're seeing a lot of weakness across that crypto space here as people try to get reset here.
Exactly. All right, we'll get to that in just a moment. First up, though, back to the markets. Way off our highs here, Charlie.
Indeed, and red on the screen, Carol. Got to begin with crypto, specifically Bitcoin, plunging now by 15.4%. Crypto, 17,000. Bitcoin, I should say, 17,545 right now. A sudden move lower in stocks is coinciding with that lurch lower in Bitcoin that has rocked market sentiment. Again, worth repeating, Bitcoin plunging 15.4% right now. The S&P moving lower, well off session highs. Right now, S&P is down 18, drop there of 0.5%. Earlier gains fizzling. NASDAQ in the red now by 90 points, a drop there of 0.9%. And optimism for the Dow also fading fast, with the Dow holding on to a gain now of 15 points, up less than 0.1%. Got to keep in mind the best level of the day, we did have the Dow up by 528 points. 10-year yield 4.13%. The 2-year 4.67%. Spot gold up $33 the ounce, up 2%, 17.09. West Texas Intermediate crude down 3.3%, 88.79 a barrel. Thursday, we get the latest inflation data with the release of the Consumer Price Index. Priya Misra is global head of rate strategy at TD Securities USA.
CPI is the number one thing the Fed is focused on. So it's going to tell us whether that December meeting is 75 or 50. Are we seeing some decline in some of the more broad-based nature of this inflation number? So it's not just the headline number. I'd like to see the details of that report, because I think that will tell us a lot more about how entrenched inflation expectations are getting.
Party City Holdco shares plunging as the party supplies retailer lowers its forecast for the third time this year and cut its headcount by 19%. Party City right now plunging by 40.3%. A coming attraction at AMC Theaters, the movie chain, teaming up with Zoom to create so-called Zoom rooms. That's right, you go to a movie house and you put everybody on Zoom. We have got AMC, which reports after the bell, up by 0.9%. Zoom now down by 1.8%. Somebody, just one person, bought a Powerball ticket in Southern California.
Can you believe
They have won
that?
a
Just
record
one?
$2 billion. Absolutely amazing, Carol.
Man.
We ought to put in a call. It was sold
Yeah.
at Joe's Service Center in Altadena.
Joe.
Joe, are you there?
Yeah.
No, Joe's gone.
Yeah.
That's an unincorporated community in the foothills northeast of L.A. But,
One person?
Exactly. Well,
Come on.
Carol, I got to tell you, and this
Come
is
on,
this is
man.
absolute. Had I won, I
What?
would have given it all away without a doubt. I mean, you stick it in the 10-year or the 2-year, and
You might have taken a cruise or two, though.
no, I would have lived off the interest like everybody else who listens to our radio station. 'Cause
Tax-free
that's the
munis.
smart thing. Exactly, that's the smart thing to do.
All right, Charlie, thank you so much. Not so smart, certainly if you're holding Bitcoin. Bitcoin extending its loss to more than 15. Actually, it was down more than 16% to below 17,500. It is bouncing around now. It's still down about 12%. Man, it's an area, Paul, where I feel like one man's crisis is another man's opportunity, because we definitely saw some deal making and consolidation today.
Yeah, this deal, it's interesting. It's Binance to buy FTX, two exchanges
It's
getting
rival.
together.
Yeah.
And that news broke just this morning as Katie Greifeld and I were on air broadcasting. I was like, what happened there? So we have Katie Greifeld in our studio now. Hopefully we've got some more reporting on this, because this was an odd deal that's really rocking the crypto space. Katie Greifeld, Bloomberg News senior markets reporter, co-host of Crypto IRL on Bloomberg Quick Take, joins us here in a Bloomberg Interactive Broker Studio. Katie, what's the backstory? What's going on here?
Paul, first of all, it's nice to see you again.
Again.
It feels like we've lived multiple lives since I last saw you. In terms of more reporting, I mean, there's still so many questions about this deal. Number one, what are the terms? I mean, what kind of money are we talking about here? But the big headline, of course, is that the world's biggest crypto exchange by far, by spot volume, is buying the second largest, again, by spot volume. Again, a lot of question marks here. We know that FTX was having some sort of liquidity event. Both CEOs tweeted to that effect. We know that FTX was being hit by massive withdrawals. We do have a tweet from FTX CEO Sam Bankman-Fried. He said that the assets will be covered one-to-one. Quote, "This is one of the main reasons we've asked Binance to come in."
So is this just about survival?
You know, I think it's too early to say, but I would venture that a lot of people didn't even know FTX was for sale. I mean, this is shocking. This was shocking news. It's been a really dramatic 48 hours. We had been seeing the two CEOs tweet back and forth at each other, but given this sort of white knight in the industry that SPF has played, I think a lot of people were surprised by this news and just the magnitude of it. When Paul and I were on radio, I was like, this is the biggest thing to happen since Terra, which I think was surprising to some of our producers.
And not so
but
long
this is
ago,
big,
right? Like we feel like we're going from crisis to crisis. Is almost
exactly. I mean, in crypto time, May feels like a long time ago, but in the grand scope of time, you're right. I mean, we're just rolling crises. There's been periods of lulls. I mean, the stat we were looking at this morning before this news broke was Bitcoin has been way less volatile than the stock market. That's not the case right now.
That's not the case. And, you know, this CEO, Sam Bankman-Fried, SBF, as the crypto folks refer to him as, I kind of thought he was like this gajillionaire. Where did all his gajillions go in terms of why was there a liquidity crisis at his company? Or was his gajillions all tied up in stock that's not liquid? Do we know any of that yet?
A lot of great questions. This sort of factors into stuff that we're still reporting out. That comes to the FTT token. That is the native token of the exchange. Binance Coin is the native token of the Binance exchange. So we don't know exactly necessarily what SBF stake was. We know that the Binance CEO, Changpeng Zhao, he's known as CZ, of course, everyone has their initials. The big news over the weekend was that he was selling more than $500 million worth of that token. CoinDesk had reported that Alameda Research, which is a trading shop owned by SBF, had significant assets in that token. So again, the direct linkage is unclear here, but it's a very interconnected world, the crypto industry.
A day before reaching a deal, Bankman-Fried said on Twitter that assets on FTX were fine.
And I mean, again, we know that they were really under a lot of pressure from those withdrawals. It seems like that was a big focus here in getting this deal done. But again, the terms of the deal.
So should we assume when he said fine because he knew that he had a deal coming?
You know, if I could get an interview with him, Carol, I would love that. If he's listening right now, please call me.
Meanwhile, let's just say crypto across the board. We've got Bitcoin down 12%, Ethereum down almost 17%, Binance Coin is down 8%, XRP is down 20%. So we are just seeing Solana is down 28%. So we're just seeing mass selling. So
I think there's a lot of systemic question marks right now.
Systemic, that's a good
I like
word.
that. But it's just for the critics out there of crypto, like a Jamie Dimon, for example, just more ammunition for
See,
calling
kids,
the question.
I told you.
See, you get
Another man I would love to talk to right now.
Right.
He's still watching it. We love checking in with you when it comes to the crypto space. Katie Greifeld, Bloomberg News senior markets reporter, co-host of Crypto IRL on Bloomberg Quick Take. She does that with Tim Stenovec. All right, let's get back to world and national news. Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. A deeply divided U.S. electorate delivers its verdict today on whether Democrats or Republicans have the right prescription to guide the nation through a bout of inflation, a looming recession, bitter differences on cultural and social issues. President Biden has acknowledged this election could be tough for Democrats in the House, but he is holding out hope for the Senate. Bloomberg's Joe Matthew has more on just how tough it could be.
Most of the projections that we're looking at from places like Cook Political Report from 538 would suggest that somewhere between 15 and 25 seats, maybe on a bad night, 30 seats flip Republican, and that would actually be pretty good on historic terms.
Bloomberg's Joe Matthew reports Republicans lost 40 House seats after former President Trump's first 2 years in office. Democrats lost 63 seats at the midpoint of former President Obama's first term. Former President Trump is already looking at 2024, telling a rally in Ohio last night he'll be making an important announcement a week from today. Bloomberg's Anne-Marie Hordern with more.
It's the announcement before the announcement. He was ostensibly supposed to be campaigning for J.D. Vance, the Republican candidate for Senate, but he said that he didn't want to announce what he had to announce there because he didn't want to take away from Mr. Vance, but I think he certainly did, because the headlines say are the fact that he will be making his third bid for the White House.
Again, Bloomberg's Anne-Marie Hordern. The lawsuits have begun over this election. National Democratic groups are challenging Pennsylvania's plan to disregard certain mail-in ballots. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You are listening to Bloomberg Business Week, watching us on Quick Take and also on YouTube right now. Robinhood Markets is down about 18%. Interesting story today on the Bloomberg, how the company's CEO, Vlad Tenev, fielding questions on the company's latest earnings call when one person asked about a dormant project. When the caller wanted to know, would Robinhood resume letting customers invest in IPOs, a Bloomberg analysis of the program, IPO Access, suggested it has been a flop for investors so far. So great to have access, but guess what, guys? It doesn't really help.
It hasn't worked out too well for you. The initiative, which allowed users to buy shares of buzzy companies like Sweetgreen and Allbirds before they debuted on stock exchanges, resulted in losses for customers who still held the shares. In an already dismal market for IPOs, those offered by Robinhood have performed even worse. So that certainly was a noble idea to, hey, make Robinhood Markets, in your experience, better by giving you, the little guy, access to some of these pre-market IPOs. But in a year where the markets have been so terrible, that wasn't such a good idea.
Is that because they didn't sell?
Yeah, exactly. So, I mean,
you tell me, you understand, Wall Street, like, as an insider. I mean, when you get access to an IPO early on, we always talk about insider selling, right? Or the ones who initially, the lockup expirations. Do initial investors tend to unload pretty quickly?
A lot of them do, and there's incentives in there that will give you a higher allocation if you don't flip. If you flip, you're going to get a reputation as a flipper.
You do, okay.
And it depends, if you're a good account like a Fidelity or Stevie Cohen's Point 72, you're still going to get a good allocation the next time. But, typically, most underwriters know who the good long-term holders are. You try to make them your anchor shareholders, and then hopefully you don't give them as much stock as they want. So if people do flip for a couple of bucks, I'm going to have Fidelity there buying because they're buying a big long-term stake.
All right, so they think about that in a big way. Well, Robinhood shares, man, it was the darling. It's down about 18%, right? Following those earnings release, the stock, I was just going to pull it up. I think it's down about 45% so far this year. Yeah, it's kind of harsh. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are trading mixed. The Dow, the S&P, they're both higher. NASDAQ on the minus side, and cryptocurrencies are plunging anew as news around Binance's potential takeover of rival exchange FTX starts to sink in, and renewed trader concerns that there is some trouble brewing within the industry and among some of its top players. Bitcoin right now down by 11% to 18,417. S&P up 11, as I mentioned, up 0.3%. NASDAQ just turning positive, barely up by half a point. Again, the Dow up by 0.8%, higher by 254 points. 10-year yield 4.12%. We've got spot gold up 2.1%, 17.10 the ounce, while West Texas Intermediate crude down 3%, 89.03 for a barrel of WTI. Lots of earnings today after the close of trading. Among some of the names scheduled to report, we will be hearing from the Walt Disney Company. Disney shares down now by 1.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. Well, go figure, it's the economy stupid again, or more specifically, it's inflation when it comes to today's midterm elections in the U.S. We talked about this earlier with Reed Pickert. This story is, this next story, in the upcoming issue of Bloomberg Business Week, out on newsstands later this week, already online at Bloomberg.com/businessweek and on the Bloomberg terminal. So let's get into it with Nancy Cook, who wrote it, White House correspondent at Bloomberg News via Zoom from our Washington, D.C. bureau. And also with us is Christina Lindblad. She is economics editor of Bloomberg Business Week. She's here in our Interactive Brokers studio. So Nancy, let's kick it off with you. I mean, it is really inflation right today when it comes to the elections. It's amazing the narrative and coming from the Republicans versus the Democrats.
Yeah, I mean, we really in the closing weeks of the election saw that inflation really has become the dominant issue. A majority of voters say that inflation and the economy are really the most important things. And what's interesting is in a New York Times Siena College poll that pollsters took a few weeks ago, it showed that voters by a 2-to-1 margin who said that the economy was the major issue thought the Republicans were best poised to handle that. So Democrats certainly wanted the election to be about a range of issues, including the labor market, abortion, threats to democracy, but really poll after poll shows voters are really focused on inflation.
Yeah, you guys have a great chart in here, and I like the pictures. They make it easy for me to understand things. And it's just like, the list kind of what are the big issues for voters. What happened to abortion, Christina? It's number 6 on the list. What happened? I thought that was going to be the Democrats' calling card.
Well, that was the hope in the summer that they were going to be able to energize voters along other, issues like abortion and gun rights, because we had school shootings.
Yep.
And specifically, women suburban voters, those are going to be issues that hopefully would energize them. But it's been really hard to turn the channel on the narrative away from economic issues and about inflation. And I have to say the Republicans, Nancy, another great chart in the story is about ad spending. Maybe Nancy can tell us a little bit about how, because that's a very clear trend lines you see.
Yeah, basically we saw that Republicans were outspending Democrats 4-to-1 in ads talking about inflation, and that really became the dominant Republican message. And, in addition to just voters citing it, Republicans sort of really picked up the baton of that and really hammered it home. And Democrats just have not been able to escape it or really come out from under that narrative, as Christina said.
Nancy, what I really would have loved has been a fly on the wall in the White House. As Joe Biden said, hey, folks, hey, all smart economic people, you said this was going to be transitory. I mean, it really, right? He was thinking a message out there talking to the American public, and yet, as it's become persistent, the White House has really kind of had to scramble and rethink its message a little bit.
Absolutely. I've been reporting on how the White House has been dealing with inflation really for the past year and a half, and my reporting shows that really starting last fall when inflation started to become a major political problem, the White House started to take it much more seriously. And the president has privately expressed a lot of concern with the fact that his aides for so long kept telling him that it was so-called transitory and temporary when in fact it was not. He got angry a few times at the National Economic Council Director Brian Deese for basically the White House's handling of inflation and its faulty messaging on it. And so it's been a real source of tension inside the White House, even as they try to point to other bright spots in the economy like the jobs market.
And Nancy, I guess it's a little bit of a messaging problem in a sense that when you think about inflation, it is a global issue. There's inflation all over this planet. Just go look at our good friends in the UK and across Europe and other places. Number one. Number two, a lot of the inflation was not the result of any particular policy measure, but it's simply supply and demand of global economies. Think oil. But I guess that's not an easy message to get across to middle America and to everyone.
Yeah, that has been a huge part of the White House's message. Like, look at these other countries; they're facing it too. This is a post-COVID economy feature. This is also partly caused by Putin's war in Ukraine. That is a big part of the White House's message. But the fact of the matter is, Americans every day are going to the grocery store and they're seeing higher prices for things like meat and produce. They're paying more for airline tickets. They're paying more for their rent or their house. And Americans are just very frustrated by the rising prices, and they sort of don't want these excuses. And even Democrat strategists say the White House and Democrats at large just have not done a good enough job talking about their economic record, but also showing that they are trying to take action on inflation.
So I guess the next question, Nancy, I don't know, wake up tomorrow, and I guess the Democrats will have to see how it plays out, of course, but to the extent that the polls hold true and some of the reporting today holds true, it'll be, I guess, time for the Democrats to maybe re-message some of their key tenets. Is that something you're hearing from some of the leaders down in Washington?
Well, I think that the White House is trying to project a very optimistic view of what's going to happen at this point. I think that they're telling people that, keeping the House will be very hard. The sentiment is that the House will likely flip to Republicans. I think the question is just what happens with the Senate. And what I'll be looking for tomorrow is the exit polling, not just the results, but what voters say about why they voted and if inflation and the economy continues to be the dominant theme.
Well, and the thing is, Nancy, I think it's how you wrap up the story. The thing is, Republicans have been really smart in terms of ad spending and the narrative when it comes to inflation, but what's their plan for bringing inflation down?
That's a great point. Rick Scott, the senator from Florida, has talked about, cutting Medicare and Social Security as a means of cutting federal spending, as a way to fight, out of control government spending or out of control rising prices. But that's not really a plan that is uniformly embraced by all congressional leaders. And so the Republicans sort of don't have an across the board plan for fighting inflation. And I think that that's something to keep in mind, too.
So, all right, Nancy, so the issue here is going to be the Senate. What's the state that you're really focusing on tonight?
I'm focusing on a few. I mean, I'm very curious to see what happens in Pennsylvania. I'm very curious about Georgia, although I think that we may not know the results of that tonight. And I'm really closely watching Nevada as well, just to see if Democrats, that's been a really close race for a while. There's a lot of union workers there, and also a lot of Hispanics. So I'm really curious to see how Democrats fare there.
Hey, Nancy, just got about 40 seconds left here. I was just thinking, going back to what you said about, the Republicans and their plan or lack thereof on inflation. Should this be an issue 2 years from now, and should the Republicans really make some inroads this time around? Will it work against them, or do you think, based on what you're seeing, that they're just better at messaging when it comes to things about the economy? And just got about 30 seconds.
I don't think they're better at messaging. I just think that the Democrats have held all the levers of power at this point, and Americans are very mad about inflation, so they're going to blame those in power.
Yeah, it's kind of how it works, right?
Yeah.
That is how it works.
Stuck with that.
Well, really smart, really relevant, certainly to the conversations we're having today. Nancy Cook, thank you so much. White House correspondent, Bloomberg News, via Zoom from our Washington, D.C. bureau. This story in the upcoming issue of Bloomberg Business Week, but find it already on the Bloomberg terminal and online at Bloomberg.com. And our thanks to Christina Lindblad. She is the economics editor of Bloomberg Business Week magazine, joining us in studio. Coming up, we're going to check in with our TV colleagues. Got to talk about the volatility in the markets and what's coming in terms of earnings after the close. This is Bloomberg.
the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. 60 minutes left here in the trading session. Romaine Bostic here alongside Taylor Riggs, and we're joined right now by our colleagues Carol Master, Paul Sweeney in for Tim Stenovic on this day. We welcome our audiences across Bloomberg Television, radio, as well as on YouTube and Quick Take. And Carol, we had a nice little rally earlier in the day, but a lot of softness here as we get closer to those bells.
Yeah, so much for the gridlock rally. We'll talk about that a little bit later on. I am seeing some outperformance, though, when it comes to the solar names in particular. If you take a look at the Invesco Solar ETF, it's up almost 3% in today's trade. Why is it higher? SunPower, Solar Edge Technologies, both reporting better than expected quarterly results, and Wall Street seeing some margin improvement. So you have the Invesco Solar ETF, Solar Edge, SunPower, they're all rallying. Check out Solar Edge. It's up 17% in today's session, and you've got Maxion Solar also up about 7.5%. So we're really seeing, Paul, this whole group charge ahead.
Yeah, absolutely. And I tell you a name I'm looking at, because there's some report after the close. The Walt Disney Company will report earnings after the close here. I'm looking at the stock. It's down about 1.4% today. It's off about 36% year to date. So people are really concerned about that pivot to the streaming business. So people are really going to be focusing on how many new subscribers do they have to Disney Plus across all their networks. So we'll be focusing on that after the close.
We go back, of course, to the broader market here. The S&P 500 had been up as much as 1.4% here on the day. It did briefly dip into the red, now higher by about 0.3%. The NASDAQ relatively unchanged, and the Russell 2000s firmly in the red, down about 0.4%. The bright spot, once again, on this day does remain, though, some of those transportation and industrial names. Dow Transport's up 0.6%.
And it's underneath the surface that actually, like yesterday, like today, you're seeing a lot of that cyclical, the value trade come back into focus. Materials, real estate, industrials, those are the top performers today. Despite the fact, Romaine, that it's off the highs of the session, you really are seeing an interesting composition underneath that surface.
Yeah, one of the bright spots on the day is actually Amgen on a 3-day run now, up 10% over that stretch. Now at a fresh record high, 291 and change, up 5% here on the day. Meanwhile, keep an eye on FedEx. Some interesting commentary coming out of the CEO over at a virtual conference with Baird, basically talking about a slowdown in demand here, particularly for air cargo. The company also saying that it actually expects to park some planes here as it's seen demand drop. Something to keep an eye on as we head into the holiday season. And of course, all the talk today has been about what's going on in the crypto space. Coinbase down about 15%, MicroStrategy down about 24%, on the back of that news that Binance apparently having to rescue. I don't know if we're going to yet to be able to use that word, but that's what it sounds like here, rescue FTX. And I just want to draw your attention to the bottom of your screen, Arrival. This was that EV startup, down 37%. The company coming out with a going concern statement saying that it has insufficient funds to cover its obligations. This was one of the big SPAC deals, quite several now, including a bankruptcy that we had yesterday. Keep an eye on that space as we move forward.
Let's talk about crypto. I had this beautiful technical chart, Romaine, of the S&P recouping the 50-day moving average, and then crypto blows up and we change it on the fly and we pull up CRYP Go on the terminal. This is a snapshot of that, everything in the red. Carol, I want to be careful because we don't want to talk about systemic risk within the equity markets, but I want to talk about systemic risk within the crypto world. There have been a lot of concerns now about what this means for regulation, if this deal actually does go through, some of the language around it, sort of a battle of the top two players, and you are seeing some big significant declines here on a lot of those major assets, if you will, coins.
Yeah, and it does feel like we were talking with Katie Greifeld, I know you guys did too, it feels like we are going from, what was it, how many months over the summer or the spring, you know, where we saw another crisis when it comes to the crypto space. So you increasingly see tremors make their way through and certainly felt throughout the crypto digital space. And that's why we're seeing so much pressure in today's trade. All right, so let's talk about where we are, because earlier, Romaine, when you kicked off our simulcast, we talked a little bit about some of the positive momentum we saw in the equity trade. We've seen stocks, rally for the last 3 days. A lot of it had to do with the gridlock trade, expectations of how the midterms will play out, and that means we'll see Republicans and Democrats a split Congress, and so that means we're not going to see any major legislation or major regulatory changes. So All right, Sean Cruz. We've had a lot of strategists weighing in. He's head trading strategist over at TD Ameritrade, and he told Bloomberg specifically, the more and more you just get polls or even some slight acknowledgments from places that the Republicans are probably going to take up at least one chamber of Congress, I think the market is actually seeing that as a good outcome. They actually want a little bit of gridlock out of Washington. You know, the NASDAQ 100, guys, is up about 3.5% in the last 3 days. Russell 2000 up 1.7%, and you've seen the S&P up about 3% on expectations of Paul Seams because of this gridlock.
Yep, absolutely. So today, clearly election day, but a lot of folks are telling me focus on Thursday. That's going to be the CPI data, inflation, because what is driving in this market is really the Federal Reserve. It's proven not necessarily to be earnings, although if you miss earnings, you're going to pay the price, but it is still a market driven by the Fed. So really pay attention to those CPI numbers coming out on Thursday, which Bloomberg Radio and TV always does.
And I just to go back to the election, because I was looking up these numbers because a lot of people are pricing in a rally here with the divided Congress. I think when they said it's a split Congress, so Republicans in one chamber and the Democrats in another, and then, of course, whoever controls the White House, typically the rally is about 5%. When you have one party controls all of Congress, so let's say all Republicans in Congress and then a Democratic White House, you actually get stronger gains of roughly about 14%. Now, obviously, that's hindsight, historical data here, but maybe it gives you some sense of why people are, at least for now, are a little optimistic about the outcome of this election.
Sure, sounds like a lot of different issues that investors are grappling with, and we've certainly heard all about those, Carol, when it comes to inflation, when it comes to the elections, getting some of that uncertainty behind us, and getting through earnings season. I bring up the Evercore ISI note. They say that we are 90% of the way through market cap. Things haven't been that bad. The bottom line is still posting growth, but we had a really interesting conversation earlier. X Energy, you're starting to look at a profit recession. That's different from an actual recession. But you take energy out of that picture, and you're starting to see some interesting things on the bottom line.
But when you see TripAdvisor drop 20% after earnings, Party City, because really we're not partying anymore, dropped 20%. And I know those are really small companies, but what does that say about our economic conditions right now? Are we traveling? Are we partying? I know Carol is.
I am. You're not.
I'm traveling for work.
Yeah.
No, but we talked about job cuts, right? What was it, the bank on Wall Street, right, specifically?
Citibank. Yep.
So if we start to see job cuts kind of spreading out, you know, beyond the technology sector, or spreading out, you know, more broadly than just tech, you do wonder, right, Mike Wilson talking about this, you know, whether or not that is going to help us kind of get to a bottom in terms of companies cutting costs, and whether or not that's a market indicator that says we're hitting, but like these are things you have to kind of keep an eye on. So bad news, good news, ultimately, because the Fed then maybe stops raising rates.
And, you know, I still think about the tech sector. We had some, you know, a round of disappointing earnings last week, 10 days, and that's really taken the wind out of the sails of what had been one of the groups that really drives this market higher.
All right, guys, we will be back. That's a wrap for now. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Quick Take. We're going to count you down to the closing bell on this midterm Tuesday. We will see you again, 4 p.m. Wall Street time.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week on this midterm election Tuesday. Carol Masser along with Paul Sweeney. Paul is in for Tim Stanovic, who is out this week, just talking with our TV colleagues. I mean, a fair amount of volatility in today's session, but as I mentioned, the equity, those major equity averages have had a pretty decent run over the last 3 days on maybe expectations about what would happen in these midterm elections, potentially.
Yeah. Are you a car share rider?
You mean like an Uber, Lyft? Yeah, big time.
Okay. Look at Lyft today. Disappointing numbers. Guidance was low. Okay, that's a problem. Stock's down 25%. It's down 75% on a year-to-date basis. What happened to the reopening trade? I know I'm using ride-sharing services.
I used it a lot more during the pandemic.
Yes.
Courtesy of Bloomberg alone, who made sure, you know, was really incredible in like making sure workers got back and forth. A lot of the ride-sharing services, I think, were put to work doing things like this for employees.
Yeah, so it looks like these companies have to find the new normal. But boy, 25% on a company with, you know, what had been a $5 billion market cap company is kind of harsh.
Yeah, and it's interesting. I'm just looking at our Jackie DeValos, who wrote the write-through. He said, I guess some of the concern too is that they're losing some market share to Uber specifically. And so, right, we look at these two different companies, and so, right, because I guess the performance of Uber was a lot stronger.
It was. I don't know. I just open up both apps, and whichever's cheaper driver to my destination, I get in because it's
Do
most
you
cases
really?
it's the same driver. They just it's just one algorithm's doing a better job than the other at that particular time.
Full transparency, I
Arbitrage.
tend to use Uber a lot more, and sometimes I compare the pricing and do a lot of different things.
I do. Yeah, I arbitrage between the two.
You arbitrage. Of course you do. Wall Street dude. All right, let's get back to world and national news. Let's head on over to Nancy Lyons once again. She is in our 99.1 newsroom in D.C. Hey, Nance.
Hey, Carol. Control of Congress is at stake on this midterm election day. Bloomberg's Nathan Hager has an hour-by-hour breakdown of some of the key races to watch.
The first polls close at 7 p.m. Wall Street time in 6 states, including Georgia, where the Senate race against Raphael Warnock and Herschel Walker might not be decided till next month if it heads to a runoff. At 7:30, Ohio and 2 other states close. Tim Ryan and J.D. Vance are in a tight Senate race in the Buckeye State. 16 more states stop voting at 8 p.m. The one to watch then will be Pennsylvania in the Senate race between John Fetterman and Mehmet Oz. At 9 p.m., they'll begin tallying votes in Arizona, Wisconsin, New York, and a dozen other states. In Washington, I'm Nathan Hager, Bloomberg Radio.
Donald Trump says he wants nothing to distract from the importance of today's midterm election, so he's holding off until next week before weighing in on his next chapter.
I'm going to be making a very big announcement on Tuesday, November 15th at Mar-a-Lago in Palm Beach, Florida.
The former president is expected to declare he'll make a third bid for the White House. Parts of Florida's east coast could be impacted by Tropical Storm Nicole. The National Hurricane Center says the storm is expected to make landfall in South Florida as a Category 1 hurricane late Wednesday or early Thursday. And there is a winner in the largest Powerball lottery jackpot in history. The ticket was sold in California at Joe's Service Center in Altadena, an unincorporated community in the foothills northeast of L.A., but the individual has not come forward. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Nancy Lyons in our D.C. newsroom, our 99.1 newsroom in Washington, D.C. All right, among the stories on the Bloomberg, and I think this is among our most read on this Tuesday, has to do with someone we talk about a lot, Ken Griffin. He's, of course, the billionaire founder of Citadel, and he's saying, I love Florida, essentially.
Yeah, exactly. I mean, he said it wasn't just low taxes that brought him to Miami, which is now his firm's adopted home, but it's also, schools, clean, safe streets, he cited, and a great place to live and a great place to call home. But it's a big deal it's a big, obviously, plus for Miami and South Florida, but it's a problem for Chicago. Chicago's lost a number of corporations, and I can't remember which the last one was, but it's just it's a real issue for some of those cities. But boy,
well, Caterpillar left Illinois,
yes,
didn't it?
Yeah.
And it's been entrenched in there in such a part. It's not in Chicago proper, but it's been so entrenched there. Here's a quote. Apparently, he was having a conversation with Francis Suarez, Miami's Republican mayor. He says, "It's going to get me thrown out of here, but taxes weren't part of our decision to come to Florida. When you've got great schools, a great environment, and your streets are safe and clean, that's when you've got a place you want to live in and call home." He is now the richest guy in Florida.
In the state, and that's saying something.
$29 billion will do it.
Yep, absolutely. Griffin's Miami move is likely to have a long-lasting effect on the city as well. To house its global headquarters, Citadel is building a waterfront tower in the Brickell Financial District, which may cost $1 billion. So putting some infrastructure in the ground in Miami to support what looks like it's going to be the headquarters for Citadel.
Right. Wall Street South, right? We keep also increasingly seeing a lot of financial firms. What's interesting, too, is they also talk about then when it comes to politics. And Ken Griffin has poured about $69 million in the 2021-2022 election cycles, according to Open Secrets, which tracks campaign donations. So, you bring with it a lot, right? Whether it's donating to areas or things within Florida, but it's also the political donations as well.
Yeah, exactly. And I think he bought an apartment here in New York City for 100 and some odd million. So
he's still keeping some New York.
Yes.
New York footprint. All right, this is Bloomberg.
facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Election day, lots of moving parts. Steep losses for Bitcoin, the Dow, the S&P, NASDAQ all higher. Right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks bounce off their session lows following that afternoon plunge in Bitcoin. Dow's back up 323 points. S&Ps are up 20, and NASDAQ is now higher by 34. The U.S. 10-year yield falls to 4.12%. Gold is up 36. Oil is trading in the red. And you mentioned Bitcoin. It plunged as much as 17% after crypto exchange Binance proposed to buy troubled rival FTX. Among the main 11 S&P sectors, only consumer discretionary was in the red. And leaders to the upside in the Dow, Amgen, Boeing, and American Express, while Walgreens and Disney led to the downside. After earnings, Take-Two fell 14%. DuPont rose 7%. And in deal news, Dow Jones reported that Goldman Sachs executives mulled an acquisition of CoreCard. Wrapping things up, Disney reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you, Bill. To hear live breaking news over your Bloomberg type squawk, SQUA on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie Pellet with the Bloomberg Business News Flash. All right, so Florida voters heading to the polls to cast their ballots for several key elections, including the governor's race and races for the U.S. Senate and House. Once a perennial swing state, Florida, as you know, been shifting more red over recent cycles. So let's get to it with Maddie Mills. She's Bloomberg Quick Take correspondent. She's on the ground in the Sunshine State. She joins us via Zoom in Florida. Maddie, good to have you here. First of all, set up the scene. It's been a crazy Tuesday. Set the scene, what you've been seeing and hearing on the ground since you got to Florida.
It has been a crazy day, Carol, so I totally understand, and thank you for having me. I've been out talking to voters all morning. One thing that is a little bit of a wrinkle here in Florida is that there is this upcoming tropical storm / hurricane situation.
Right.
So when I was out early this morning, it was really rainy, really tough to see any sort of lines forming at some of the biggest polling sites that I went to. But as the sun came out and people got on their lunch breaks in the middle of the day, I did start to see a little bit more foot traffic to polling centers. But also we have to remember that we've had record-breaking early voting across the country this year, which is typically a kind of Democratic stronghold. We see a lot of Dems going out in early voting, but here in Florida, we saw a higher percentage of Republicans sending in those early mail-in ballots. So that could mean that I have a little bit of an easy night tonight if we get those results in early. And of course, in the polling, it is looking likely to be red up and down the ballot here in Florida.
So, Maddie, I've been reading some reporting about how the Democratic Party is seriously at risk of losing the Latino vote in places like Nevada, in places like Florida, and I know Florida's primarily, and particularly South Florida, Cuban. Talk to us about that. What are you hearing within the state of Florida about that?
Yeah, I'm in Miami, which is so interesting to watch, right? Yep. Because former President Trump lost this county in 2016 and 2020. But in the polling during this midterm cycle, it's looking like we could see this county flip red for the first time in decades. This is really a Democratic bastion county that Dems can count on. And if it does flip red, that will undoubtedly be partially due to the Latino vote, which is, of course, a huge population here in Miami. I did speak with a couple of Cuban immigrant voters this morning, and every single one who I spoke with was very, very blue up and down the ballot. They talked a lot about the Dobbs decision, the rollback of Roe versus Wade, and how it reminded them of living in a country that limited their rights and their words. And so they were really motivated to get out and vote blue today. So a reminder there, too, that sometimes the polling doesn't necessarily reflect the voting of every single individual that's part of a group of constituents, right? So we'll have to see how that shakes out. But the Latino vote is crucial for any party because it is such a majority in the country.
Hey, Maddie, speaking of crucial, we were just showing for our YouTube viewers and our Bloomberg Quick Take viewers a video of the former President Donald Trump and his wife Melania making their votes in Florida earlier today. What is the impact and influence of the former president on the elections in Florida? What are you hearing? Are people citing his name a lot? I'm just curious.
Yeah, that was my big question to voters all day today. Specifically, the voters who told me they were voting for DeSantis. I asked them, did you price in the potential of DeSantis to leave his post early to run for 2024? And if so, what are you thinking about Trump 2024, DeSantis 2024? One of the folks I spoke with said, Trump, DeSantis, it's one and the same, right? There was kind of a joke made about like, I'm voting for Trump as in I'm voting Republican. So I thought that was really interesting. I talked to another voter who said they're worried about Trump ending up in jail over the course of the next couple of years. So he's rooting for DeSantis to run in 2024. So it is really interesting seeing how voters feel on both sides here in Florida. But in general, across the country, we've seen that the candidates, of course, that are supported by former President Trump are continuing to poll really well. So, kind of across the board, more broadly, zooming out from the state of Florida, it has been kind of a boon to GOP candidates to get that backing from the former president.
And Maddie, Carol and I have been featuring some reporting today about how some of the key issues for voters, it's really the economy, really inflation in particular. Is that what you're finding down there relative to, say, immigration or Roe v. Wade or other issues?
Yeah, I was certain that the biggest issue that every voter I talked to today was going to talk about would be the economy, because the polling overwhelmingly shows us that the economy, inflation, gas prices are the #1 issue for voters. But interestingly, I had to be the one to prompt every voter. I spoke with dozens of people today. None of them brought up the economy at first blush. Most of them brought up kind of this idea of polarization, wokeism as an issue for Florida voters, democracy, the safety of elections, voter fraud, things like that. A lot of people here in Florida talking about COVID lockdowns, which has been a key talking point of the DeSantis campaign, that DeSantis was very pro keeping schools open, things like that. So the economy did not seem to be the first and foremost issue for folks in Miami today. Of course, that could just be because of the people that I spoke with, but really interesting to see kind of the polarization of the country come up more frequently as an issue from voters than even the economy.
Like real estate, sometimes elections are very, very local in terms of the
That's
issues,
right.
right? No
Good
doubt
point.
about it. Hey, Maddie, just got about 20, 30 seconds here. Does the standing, sitting governor, Ron DeSantis, really have anything to worry about here? Because I know, Charlie Crist is going for the 3rd time at this spot.
Yeah, Governor DeSantis is doing really well in the polls, so he's really likely to have a good night tonight. And even here in Miami, he might pick up a county that, as we said earlier, has been traditionally blue. So it could not only be a good night for him as governor, but a good night for him as a potential 2024 candidate as well.
All right, kiddo. Well, stay safe, stay dry. Maddie Mills, correspondent at Bloomberg Quick Take, giving us a rundown of a key state when it comes to certainly presidential elections, but certainly watching for what happens and what it indicates maybe for 2024. Maddie Mills again from Bloomberg Quick Take. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Gotta say, man, if you've got a charging station for your EV, you're gonna hope that like the power stays consistent and it's not like the market moves today.
Exactly.
Like up, down, up, down.
Yeah, and the big thing is, I mean, I'm into the whole EV thing, but
Me too.
you
Have you
to
bought
have
an
it.
EV?
No, I've not. But you gotta have the charging stations out there. That's the only thing I think could be a gating issue. So.
Yeah, it's kind of important, right?
Yeah, you need that stuff.
All right, we're going to talk about that with our Bloomberg Intelligence senior auto analyst Kevin Tiny in just a moment. Let's get back though to that up-down market trade. Here is Charlie Pellet.
Thank you very much. That certainly sums it up. That's what's going on with the Dow, the S&P, and NASDAQ. They are all now rallying solidly in the green. What an afternoon this has been. Right to the numbers. We'll give you the why and some color in a moment. Got to begin with Bitcoin, though. That is the major story, down 11.9%. Actually, one of many major stories today. Bitcoin tumbling to 18,280. Again, a drop there of 12%. The S&P now higher by 38 points, up by 1%. Keep in mind the high of the day on the S&P was an advance of 1.4%. The Dow up now by 469 points, up 1.4%. NASDAQ up 91, a gain there of 0.9%. 10-year yield 4.12% right now, with the 2-year 4.67%. Spot gold up 2.2%, $17.12 the ounce, and a sell-off in West Texas intermediate crude today down 2.7%, $89.29 a barrel. Nat gas is plunging 9.8%, $6.26 per million BTUs. Stocks are falling in volatile trading amid sharp declines in some risk assets. Cryptocurrencies tumbled as news around Binance's potential takeover of rival exchange FTX started to sink in and renew trader concerns that there is trouble brewing within the industry and among some of its top players. In the meantime, it is election today. Americans are casting ballots in midterm elections. They say the economy is their number one priority. Henrietta Trey's is Director of Economic Research at Veda Partners.
I think the electorate, and we even heard Donald Trump yesterday say that it's to do with energy prices. So a big portion of that is out of the control of either party. We've seen Congress try to address energy prices for the last year, and there's really very little they can do. Biden's obviously released the SPR as extensively as he really can, but it's the war in Ukraine, and I think voters are smart enough to understand that.
And the SPR reference there to the Strategic Petroleum Reserve. NVIDIA shares higher as it begins producing a processor for China. NVIDIA up right now by just about 2.3%. Take-Two after earnings plunging today by 13.7%. Lots of earnings after the bell, including the Walt Disney Company, News Corp, IAC, and Akamai. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. It is time for another edition of Bloomberg Plugged In, your weekly look at EVs, brought to you by Audi. Don't let someone else drive off in the Audi model you've always wanted. Visit your local tri-state Audi dealer to get behind the wheel of yours today, or visit AudiOffers.com for more information.
All right, Carol, one of the best auto analysts out there on the street, in my opinion, is Kevin Tiny. He's a senior autos analyst for Bloomberg Intelligence. He doesn't just drive cars, and he gets like a new car every week or two from the manufacturers to test drive.
Fine.
But he's got like grease on his fingernails. He takes cars, puts them back together for fun.
That's cool.
So he really knows what's going on. So Kevin, I got to think that this switch to electric vehicles has got to be tough for a guy like you. You're an internal combustion engine kind of guy, but it's upon us, right? I mean, how are you viewing it right now?
Yeah, look, I think, and as an enthusiast, right, to me, it's just a different drivetrain. And maybe that's understating it, but we've gone through drivetrain technology for over a century. And I'm okay with electrification. I will say I recently had the F-150 Lightning.
I did as well.
And it took a really long time to charge. I'll say that, longer than I expected. But look, if that drivetrain is in a body architecture that I like, two-seater convertible, I'm fine with that, right? If it's less
I don't believe you, by the way.
Well, look, I think if you took something that is good looking and is fun to drive, I have no problem with the technology except for the recharge time, at least as it stands now. But I think that's part of the story, though, is that what we're getting are the types of vehicles, the body architectures, that will make automakers money. And I still believe, we've talked about this at length, that it's not about what I want. It's not about what the consumer wants or what the dealer wants or anything else or the government wants. It's what makes automakers money. And so right now that's trucks, right? That's pickup trucks, that's SUVs. So until they can be consistently profitable on the technology, and that's getting harder and harder to do, this is what you're going to get. You're going to get six-figure pickup trucks. You're going to get or low-range affordable vehicles that don't work for everybody. And it's, I feel like the focus is on the wrong side. It's about the consumer driving adoption. And I'm saying, no, it's about the automakers building what the consumer wants. And they will only do that when there's profit in it.
Well, I feel like, Kevin, too, it's like, the question of what came first, the chicken or the egg, continues to plague the EV space. And I'm all in as soon as I feel like there's some options I find interesting. But I'm concerned about charging, but also the accessibility, especially for anybody who lives in a major city. Like, where the heck am I going to plug it in?
Right. Yeah. And if you think about it, and what I do, just in my own mental exercise is think about gasoline stations, right? And what have we seen there? It's not about gasoline anymore. Everything's a convenience station. Everything has service, vehicle service. So it makes me wonder, right? Is anybody making money on gasoline? And it's going to be the same kind of scenario for charging, right? It's going to be a mall attached to it. The other thing is, when I think about
cafe, right? I'm going to go get lunch.
Sure. Well, because you're going to be here for a while, right? You're going to be here. If you're first in line, you're going to be here for a while. If you're third or fourth in line, you're going to be here a really long time. So, and the other thing I think about gasoline stations, right? The access to them is pretty easy, right? On the main road, you're in, you're out, you're on your way. Where I think charging stations, if you're going to have people milling about for a lot longer, that's going to be really difficult in terms of congestion to say, well, why don't gasoline stations become charging stations? And I don't think it's going to work that way. I think it's going to have to be sort of bundled with a mall or a restaurant or sort of like maybe a movie theater. Who knows if it's going to be that long to charge? But I feel like the money is not in the charging, right? It's going to be all those other services that are provided around it.
Yeah, it's kind of interesting to think about it that way,
I don't know. Yeah, I don't know how we're going to do this, but they will figure it out. Kevin's been consistent.
Yeah.
He doesn't care about the technology, but it's just that as soon as they make some money, they'll bring them out to you.
Right, it'll make sense.
I was like, why is everybody letting Elon take this market?
I'm waiting. Kevin Tynan, thank you so much. Senior autos analyst at Bloomberg Intelligence, joining us via Zoom from BI headquarters in Princeton, New Jersey. All right, right now, let's get back to world and national news. Off to Nancy Lyons we go. She is in D.C. Hey, Nance.
Thanks, Carol. Voters are going to the polls all across the country today, but more than 44.2 million people have already voted in these 2022 midterms, outpacing the last comparable election. That's according to data compiled by the U.S. Elections Project at the University of Florida. By comparison, for the 2018 midterms, about 39.1 million people voted before Election Day, either in person or by mail. Because of all the early voting, we still might not know the results of some tight congressional races for days. That's so those mail-in and absentee ballots are counted. Julie Norman with University College London Center on U.S. Politics says it's important for both Republicans and Democrats that today's vote run smoothly.
There's over 300 election deniers on the ballot today in both state and federal offices. We know that many will probably be in office as of tomorrow. There might be some challenges, and I think many of us are just watching that closely.
President Biden and the Democrats have warned that democracy is on the ballot. University College London's Julie Norman says it's not clear whether that message has broken through the concerns about inflation and the economy. Well, some voters are weighing in on the number of TV ads for candidates. This Republican voter says she found most of them confusing.
Unless you read and you go back and read people's policies and what they stand for, you can't follow those commercials.
The total cost of state and federal elections this year is projected by tracker Open Secrets to be close to $17 billion. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. Carol Masser, along with Paul Sweeney. Paul is in for Tim Stanovic, who is out this week. You're listening and watching Bloomberg Business Week on this midterm election Tuesday. In the meantime, I love this story.
Yes.
Simon Cowell, you know who he is,
Sure.
right?
Yep. America's Got Talent, I guess.
American Idol.
American Idol.
All this good stuff.
All that
No,
stuff.
all of it, right?
All of it.
He's got an entertainment company. He sold $125 million of bonds backed by the Got Talent televised talent shows specifically, and what the arranger of the debt said is the first securitization of royalties from a reality television program. Folks, get real. This is what's happening.
Yeah, it's interesting. It kind of took me back to the Bowie bonds when David Bowie
Yes.
issued bonds
Good
against
point.
the royalties of his music, and now the musicians are just selling their catalogs outright and getting obscene amounts. But I think what Simon Cowell is saying here, and he worked with White Oak Merchant Partners, a brokerage firm. I think what they're saying is these are predictable revenue streams.
Right.
These are royalties based.
As long as they're popular, right?
Yeah, and they're long-term contracts, and they're steady Eddie flows, and that royalty flow is predictable, and that will support the payment of the bonds.
And you don't give up any equity, right?
Right. You keep control of it.
Right.
So that's kind of an interim step before you might sell the entire rights overall to someone else.
Really interesting. And apparently, I was going back to a story. We were talking about this in the newsroom back in August of this year. Justin Timberlake royalties were used to back $222 million worth of bonds.
Yep.
So repackaging royalty payments from a broad catalog of songs. I mean, it's really interesting to see how this is happening. And this is basically, like they said, this was, I think, all private, right? The securities were sold privately. So
Yes.
all of this happening
Off exchange,
right?
privately off exchanges.
Not in the public markets.
Yeah, so the transaction, could serve as a blueprint for other owners of media properties that are looking to borrow. It says Freddie Boom, which is a great name, head of structured finance at White Oak Merchant Partners, in an interview. So this is the first one, and it's certainly Simon Cowell, and he's got tremendous success with his shows. So if anybody can do it, it should be him.
It always just reminds me of like the growth of the private markets increasingly.
Yes.
All right, this is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Election day, a move higher for the Dow, the S&P, and NASDAQ. What a day. It has been a volatile session. Lots of moving parts to this market. Right now, we have got the S&P up 37. That is a gain of just about 1%. Those numbers don't tell the entire story about what's happening today. The Dow up 452, up by 1.4%. NASDAQ up 97, a gain there of 0.9%. Bottom line, equities on track for a third day of gains as investors await midterm election results. They're also monitoring a sell-off in crypto tokens that has wiped out roughly 11% from the price of Bitcoin. Right now, we've got Bitcoin at 18,396. Bitcoin right now down by 11.1%. 10-year yield, 4.13%, with the 2-year yielding 4.67%. Spot gold up 2.1%, $17.11 the ounce. West Texas Intermediate crude oil down 2.7%, $89.28 a barrel on West Texas Intermediate crude. Natural gas, perhaps the bigger energy story today. In that gas, plunging 9.6%, $6.27 per million BTUs. Lots of closely watched earnings after the close of trading today. The Walt Disney Company down now by 0.2%. We'll also hear from News Corp, IAC, and Akamai. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
That's right, Charlie. Just a few things going on this Tuesday. All right, Charlie Pellet there with a Bloomberg Business News Flash. It is 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. Over the past few decades, Europe has undertaken a monumental transformation of its electricity sector, dismantling national monopolies and rearranging the pieces into a common market. Amazingly, it mostly works. So it would be ironic if the totalitarian leader of a former Soviet state convinced Europe to abandon this free market. Yet that's now a looming risk, as European officials struggle to respond to Russian President Vladimir Putin's weaponization of energy supply. No doubt, getting through the immediate crisis will require some suboptimal policies out of sheer expediency. But this doesn't mean the broader reform was misguided. On the contrary, creating a unified market has delivered vast benefits. Europe shouldn't let a Russian dictator undermine them. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg Opinion, please go to bloomberg.com/opinion or OPIN Go on the Bloomberg Terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, folks, we've just got about 10 minutes left in today's trading session. Definitely bouncing around those major equity averages off our highs and lows, but green across the screen. And if I look at the 11 major industry groups in the S&P 500, everything is higher, although consumer discretionary just barely in the green. So let's get to it with Marianne Bartel. She's Chief Investment Strategist and Managing Director at Sanctuary Wealth. It's a platform for a network of registered independent financial advisors. She, by the way, spent more than 2 decades at B of A Merrill Lynch, where she was head of technical and market analysis, where she and I used to talk a lot over the years. So it's so great to have her back. She's joining us via Zoom from Nyack, New York. Marianne, how are you?
I'm doing great. Thank you so much for having me on the program.
Well, it's great to have you here. Let's talk about the markets. You guys do work with and support a lot of financial advisors. What are you hearing from them when it comes to this market environment?
You know, Carol, it's really interesting. They've been very quiet. I haven't gotten too many questions, which is really quite interesting. You know, I can spin that both in a positive way and a negative way. What I really feel is that our firm is very well positioned for the episodic volatility. That's been the theme that we've been talking about for both the equity market and the bond market. And I think they've really have educated their clients to kind of weather some of the moves that we've been getting in this market.
Marianne, this market seems to be one that's driven in large part by macro drivers. Take the Federal Reserve interest rates, for example, or political contests here in the States, or geopolitical issues in terms of maybe the war in Ukraine and so on. But earnings also matter, don't they? And we just finished up an earnings season. I was wondering kind of what were some of your takeaways from this earnings season?
You know, that's a great point you make. We love to talk about the macro. It's a lot of fun. But at the end of the day, stock prices respond to earnings. And, you know, the good news this quarter was earnings have not been a disaster. And many people were expecting a disaster, but they're not great either. Some companies have done well. Some companies have done very poorly. If we look at where we're standing so far in earnings season, we've got earnings up around 2%, which is not that great. And then if you take out energy, you're actually down 5%. So the bulk of the earnings this quarter has actually been driven by the energy sector, which is a sector we happen to like a lot.
What do you make of the midterms today? I'm looking at our Markets Live blog, and they've got a headline on a story: the U.S. midterms will not change market direction. Because when you think about things like valuations, because that's about earnings and interest rates, is that a good point here? That ultimately, at the end of the day, you got to look at what a particular publicly traded stock is worth and how it compares to maybe its historical valuations and how it compares to the market environment.
That's absolutely correct. Valuations do matter. And what you've been seeing in this market is that, you know, tech stocks got very overvalued. And that's where you're seeing much of the decline, especially in the FANG space. And I think they're, you know, re-rating multiples because interest rates are going up. And this is a very well-known story. But we do like to talk about, you know, midterm cycles, how do markets, you know, behave. And if you study the average midterm election cycle with the market, you actually bottom in October, which is what we did, and rally into year end, which is what we're doing. And then seasonally, November and December are two of the strongest months in the year. So, you know, when you kind of combined, you know, the seasonal behavior patterns and not having earnings a disaster, the market has actually been able to rally. But we are concerned that if interest rates continue to go up, you're still going to derate the multiples, and that will eventually put pressure on stocks. But, you know, we still think Santa Claus is going to show up this year.
So in your outlook, it sounds, Marianne, that you'd prefer value over growth, maybe even small caps over some of the larger ones. Is that how we should think about it? Is that what you're kind of trying to communicate to your folks?
Yes. So that's where you've seen the shift. And something that I learned many, many years ago, actually from my aunt that went to Wall Street in 1956. And what she always told me, when a market is in a bear market, you eventually start seeing the leadership emerge. And that's what's happening, because yes, if you own tech stocks, it feels really bad. But if you own energy, if you own some industrial stocks, if you own select healthcare, you don't feel like you're in a bear market. And that's where your new leadership is. And that's where the value is. Yes, they're called value. And if you look at the equally weighted S&P, it's outperforming the S&P, which is a cap weighted index. And small caps are starting to do better than large cap. And one of your analysts actually pointed out, and I thought it was a great observation, that small caps, if you used 23 earnings, are trading at around 14 times, which is very, very attractive.
Your core, too, as we mentioned when you were at B of A, you know, Marianne, was doing technical analysis on the markets. You talk about, you know, midterm cycles and what we've seen historically. When you look at the technicals, how does this market seem to you, or what does it say?
So right now, on a very short-term basis, so I would say over the next 3 months, yes, the markets can rally. And, you know, what could potentially happen is you can see 10-year Treasury yields maybe even fall to 3.5%. Wow. But that's still in a context of an uptrend where we think that 10-year Treasury yields can still get to 5%, and twos can also get to 5%. But if rates can actually fall here, I think that's going to allow equities to rally. And, you know, the VIX is already rolled over, and I think that can fall to around 20. But then I expect as rates continue to go up over time, and the Fed has made it very clear that they're not done yet, that is going to put pressure on the equities in the first quarter of the year.
Marianne, real quick, 30 seconds. Is there a sector in the equity market that's just screaming at you right now?
High octane in energy. It's across the board. And this actually reminds me of the 2000 period. Now, I want to say, you know, technology stocks valuations completely different. You're talking about 200 PE multiples in 2000 in the 20s now. But we got a leadership shift into value, into energy in 99, 2000 in commodities, and it feels very similar. So I think the number one sector next year is going to be energy, followed by industrials being a top winner.
Yeah, it's certainly been an outperformer. A little bit mellow today, but we definitely have seen some outperformance. Marianne, thank you so much. Appreciate it. Marianne Bartels, Chief Investment Strategist, Managing Director over at Sanctuary Wealth, joining us via Zoom from Nyack, New York. All right, folks, we just have a few minutes left in today's trading session. We're bouncing around off our highs and lows, but right now, time to head over to our TV colleagues. We're going to get to Beyond the Bell live on radio, TV, and YouTube, and on Bloomberg Quick Take. We're counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Taylor Riggs. We're counting you down to the closing bell. Here to help take us beyond the bell. It's our global simulcast with Carol Massar, Paul Sweeney stepping in for Tim Stenovic on this day, and we welcome our audiences across Bloomberg radio, television, as well as on YouTube and Quick Take. And Carol, 3 days of gains here for equities, and I want to point out this actually follows a pattern that we've seen around election cycles, where we tend to see these 3, 4, 5 day gains sandwiched around election day. That trend, at least for now, appears to be holding.
Well, speaking of what we've seen around midterm election cycles, we were just talking with Marianne Bartels over at Sanctuary Wealth. She used to be at B of A. She was a technical analyst for 20 years, 2 decades. But she said typically in these midterm cycles, you tend to see a bottom in October, which is what we got, and then you see a rally into the year end, which is what we are seeing at this point. And so she's keeping a watch on interest rates to see whether or not there'll be some more momentum when it comes to the stock trade, Paul.
Yeah, and Carol, I think Marianne Bartels also made a good point about what's going to lead this market here. Right now, it's been such technology-driven market really since the great financial crisis. She says now in this market, she expects energy to continue to lead, consumer staples, things that will do well in an environment that does have, in fact, higher interest rates.
That sort of echoes similar comments, Romaine, that we just heard from Angela Mwanza, saying that energy and sort of a reinvestment in actually fossil fuels is coming, just given the supply and the demand picture underway. Energy certainly, and some of those cyclicals have been big leaders as of late.
Yeah, absolutely. I mean, energy really has been the story, though that's a little bit on the back foot on this day. Everything else is participating in this rally here, as long as you're not too picky about the types of companies, because it is a lot of materials names leading us higher on the day, not necessarily in the discretionary and tech space. Closing bells here in New York, with the Dow Jones Industrial Average going to finish the day higher by about 1%. The S&P and NASDAQ, which both at one point actually were in the red on the day, also higher by roughly 0.5% for both the S&P and the NASDAQ. The Russell 2000, though, it actually dipped into the red a little while ago, and it looks like it's going to finish the day there, only down fractionally, less than 0.1%, but in the red no less.
All right, so as we settle in here at the close, we are seeing that this was really broad-based buying when it comes to the Tuesday trade. And just taking a look at the S&P 500, most names in the index were actually higher today, 356 to be exact, 143 to the downside, Taylor, and 4 unchanged. So we saw investors really finding a lot of opportunities today.
Yeah, you really saw that on a sector level, Carol. A few sectors underneath the surface, and it looks pretty broad-based. Let's start with the quote best performers up top. A lot of green: semiconductors, materials, transportation, boring, telecoms. Those are leading. You're up 1.25 to more than maybe about 2% or so. Down at the bottom, there's actually a lot of green, even in the worst performing sectors. But there were 3 sectors, Carol, in the red. It's retailers and it's durables, and then it's auto components again, as we've seen some auto components down there at the bottom for a few days.
Yeah, I just want to jump in here because, of course, we've been keeping an eye on the crypto space on the back of that news regarding Sam Bankman-Fried and FTX. Coinbase now coming out with a statement saying that it has no direct danger right now of liquidity or credit risk. That's coming from Coinbase, and we know there were some issues a little bit earlier reported on Coinbase, Carol, with regards to connection issues and other folks are trying to transact. But Coinbase basically saying that there is no direct danger of liquidity issues, at least on its platform.
Right, when you start to hear liquidity crunches, everybody in the space is going to come out and say, hey guys, we're okay, to make sure that there's some reassurances, especially when you saw the pressure when it comes to the cryptocurrency market today. All right, let's get get to some individual gainers, if I may. I mentioned earlier about the solar space. It was definitely outperforming today. And check out Solar Edge Technologies. It was up 19% in today's session, topping the S&P 500, reported after the close last night. Third quarter revenue beat, but SunPower also had a third quarter beat and a 63% increase in customers. So the whole space really was on fire, no pun intended, in today's trade. Expeditors International of Washington up about 9%, also topping the S&P 500. Love this kind of name. It's a global logistics company, clearing, customers brokerage, air freight. Third quarter EPS beat, so sometimes a good indicator of what's going on in the economy. No doubt about that, but definitely outperforming today. And Groupon, go figure, it's not the company and certainly not the share price it used to be years ago, but nonetheless up 27%, rallying today despite a third quarter revenue miss and some other concerns. But the company's saying it's making some progress with its turnaround strategy. It's cutting costs. Also did have a bunch of houses on the street, Goldman among them, cutting their share price, and it's still down about 63% this year, Paul, but up 27% today.
All right, good stuff. All right, well, earnings still matter. Yes, we talk a lot about the Fed. We talk a lot about the midterm elections, but earnings matter. And when you miss, you pay the price. Let's just take a look at Lyft. I still ride my Lyft. I still ride my Uber, but they had some disappointing numbers, some disappointing guidance. Stock down about 23% there. So this is a, $6-7 billion market cap stock to start the day. So a big, big move in that name as well. Take-Two also had some disappointing earnings and guidance as well. And you think about the Take-Two, the gaming business, it's all about mobile gaming. It's not so much sitting in front of your console. It's about having it on your mobile device, and that's where they called out some weakness. And then in stock, I've been following for a long time. It used to be a corporate banking client of mine, Medtronic, medical device company, really high-quality company. But they had, as does happen, they had a disappointing test from the FDA on one of their blood pressure studies. Didn't quite have the efficacy that the market was looking for. So that stock off about 6% today.
And I just want to mention, too, a couple other notable decliners back in that crypto space. Robinhood down 19%, 20% here on the day.
We've really seen a shakeout within the full crypto space as well that I know that we want to continue to dive into. Take a look quickly at the yield space as well. We still have about a minute or so until we get to Disney earnings, and you're really seeing bonds a flight to quality on days like today, even though you continue to see a flight within the equity market. Bonds are catching a bid. You're down by 6, 7, even 8 basis points on the day. So you're really seeing some still inversions by about 50 basis points or so on the 2s, 10s. But it really has been sort of a flight to quality here for the last few days, maybe making a lot of people think that peak yields is behind us. So that certainly, Romaine, has been a big call. Not quite sure we're ready to say that yet.
Not quite. I mean, I guess if you look hard enough, you can certainly find some signs that maybe we're on that way. But the question is, when do investors embrace that? And then when you have something like we had today in the crypto space, which of course, still has some pretty significant correlations to the broader market, you wonder if that risk appetite is ready to come back just yet.
Big question. Good question. I know that we're getting a couple of these earnings reports, Carol, coming out at any minute. And I know still waiting to hear from Disney as well. I know, Paul, and we are getting those numbers, Paul. So I'm going to get right to those. Fourth quarter revenue coming in a little bit light, $20.2 billion. Estimates have been for $21.3 billion. Fourth quarter parks and experiences operating income here, $1.5 billion. Fourth quarter media and entertainment distribution operating income coming in at $83 million. The subscriber numbers for the fourth quarter, Disney Plus subscribers coming in at 164.2 million. That is ahead of expectations of 162.5 million. Fourth quarter total Hulu subscribers right here on the nose. 47.2 million, exactly on with estimates at 47.2 million. Disney says that they are seeing Disney Plus still achieving profitability in the full year, the fiscal year of 2024. And again, really looking at some decent subscriber numbers that the market really had been looking at. ESPN Plus, for example, also looking at 24.3 million, estimates 23.9 million.
A lot of numbers there here. We talk about Disney being an entertainment company, but Paul, this is actually, I would say, a well-diversified entertainment company. You used to cover this company when you were an analyst here. What do you make of it?
Yeah, so, revenue and EPS missed, but as we've talked about over the last day or two previewing this company, it's really the main metric I think investors are focusing on is these total streaming subscriber numbers. And again, as Taylor mentioned, margin came in better than expected, which is the good news. And I think that's kind of what's going to support this, because this is a company that has really changed its entire business model as it relates to the entertainment business. They've shifted away from a reliance on the cable TV bundle that we all grew up with, and now it's streaming direct to consumer. And the question for people for investors is that going to be as profitable as the old model, which was very profitable? And it's still unknown right now.
All right, well, when it comes to profitability, Disney's saying Disney Plus still achieving profitability in the fiscal year of 2024. This is important in terms of what it says about the outlook, but this is what it's all about, right? That subscriber base in particular, Taylor, and whether or not it's able to meet those numbers, because this is the big bet for Disney going forward.
Huge comments. And Paul, I'm curious about this path to profitability, especially as they come out, Paul, and they talk a lot about then looking at not only the price increases, but the ad-supported tier that we all know was coming December 8th. And they're talking a lot about how they can achieve that and create shareholder value. What is the pressure to have these streaming businesses be profitable?
It's absolutely the pressure point for the entire industry, not just the Walt Disney Company. All the big media companies have staked their futures on streaming. You think about some of the mergers that have taken place over the past 4 or 5 years. Fox, literally Rupert Murdoch selling his media business because he said he couldn't compete in this business. So all the big major media companies have pinned all their hopes on streaming. And the question is the profitability of that business. And for the Walt Disney Company, they said it was going to take 4 to 5 years to break even on their streaming business. And that's what it's taken.
Feels like the Disney results are just kind of our environment right now, that those streaming numbers coming in better than expected, but their streaming costs are higher and the ad sales softening. So it's never just all in or all out. Like, it's always kind of a mixed news it feels like we're getting from a lot of the corporate players. All right, guys, we do see Disney shares under pressure. We got to wrap. That is our cross-platform coverage on radio, TV, YouTube, and on Bloomberg Quick Take. We call it Beyond the Bell. We will see you same time, same place tomorrow.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, folks, we're going to stay with Disney. As we mentioned, Walt Disney reporting sales and profit that fell below Wall Street expectations, held back by weakness in ad revenue and higher than expected losses in streaming TV. And we have been watching Disney shares. I just want to pull it up on my Bloomberg. We've seen them under pressure, but bouncing around in the aftermarket. They are down about 5%. So let's bring in John Ehrlichman. He covers the media space and certainly knows a lot about Disney. He is co-host of Bloomberg Markets on Bloomberg TV, and he joins us via Zoom in Toronto. So, hey, John, first of all, most important aspect of this report, I'm assuming you're going to say streaming, but I'll hand it over to you.
Well, and you guys talk all the time, Carol, about this. The reality is that Disney has repositioned their business around streaming. So every quarter, it has felt like for these last couple of years had to be a determination on how their streaming business is faring. And when you look at what's happening there, we're still seeing the growth in that business. They've now continued to tally up more than 160 million subscribers, and they've done that in less than 3 years. It's an astounding growth story, but I think right now the question becomes, does that continued growth in subscription offset some of the other concerns out there, the revenue and profit story that fell well short of Wall Street's forecasts? I mean, we could spend the whole hour talking about every aspect of the Disney business, Paul and Carol, but I think at the end of the day, what they tried to do was really focus around the ability to continue growing Disney Plus and to double down on the messaging that in terms of making it a profitable business by, call it September of 2024, that is achievable. And we're going to be watching this play out in real time over the next few weeks. They'll roll out a higher priced Disney Plus. They'll have an ad tier. We already know that story a la Netflix. And obviously, the company's management team has been not shying away from raising prices at the parks and certainly with Disney Plus. And so I think for a lot of investors, this is going to continue to be a bet on where Disney is heading into next year versus whether these revenue or profit numbers in the period satisfy Wall Street.
Yeah, that's exactly right, John. I agree with you there. And one of the issues that people can't forget about is this is still a media company that depends a lot on advertising. And when you come into and potentially coming into a recession, one of the budgets that gets cut by corporate America, corporate Canada, or just anywhere is the advertising budget. I think Disney's calling that out a little bit here in this quarter, saying, this is going to be a challenge not only for us, but for other media companies as well that rely upon advertising.
I think that's true, and it already seems like, and we'll find out, Paul, with the quarterly call, but it feels like Disney is going to push the idea of having the higher end content, the can't miss content, the sports programming that is traditionally what has kept people with ESPN. I think the other thing that they'll likely shed some light on is as that Disney Plus base grows, what they can do with that. I mean, we've already watched them transitioning programs like Dancing with the Stars to the Disney Plus streaming service. We've already seen little nuggets of the way by which they hope that Disney Plus brand will allow super fans to, buy merchandise from any of the different Disney properties. Can they weave more of that story into the advertising product? And that, is going to be equally interesting, Carol, right? Netflix is trying to prove its advertising case simultaneously.
Well, John, one thing I'm going to ask you, as you said, Disney, expects the streaming service to be profitable by 2024. Investors are already kind of, how much is the stock down this year? I mean, it's down a lot. So I do wonder, John, what is the route to profitability? Content costs a lot of money. Is it just the law of large numbers and subscribers that gets them there, or what? I just got about 35 seconds.
Yeah, the bottom line is you charge more.
Oh, no, we have longer than that. Sorry. Go ahead.
You charge a little bit more, Carol, and you keep the costs down, and you hope absolutely that the law of large numbers does work. Just to give you context, though, for your audience, we're talking about, I think, a loss of $1.5 billion on the direct-to-consumer business in the quarter. So we've been talking about billions being lost for launching this since 2019. So they've got a ways to go to get there. I think an equally interesting question is, do they sacrifice other parts of the business to ensure the advertising story really shines with Disney Plus? As I said from the offset here, this is where they have positioned the market's lens, the market's attention. And to your point, even though subscribers have continued to grow, the stock, like a lot of the market, is under pressure. And coming into this report, it was down about 35% for the year overall, like a lot of media companies.
Yeah, and the stock's down about 7% here in aftermarket trading. And I guess one of the concerns, John, for investors out there is kind of, you called it out, is this, it's expensive to program all these big companies, including now their streaming businesses. And the amount of money they're spending, it just seems like it's an arms race here where, and I guess investors are saying, hey, wait a minute, isn't there a limit to how much you guys, being the industry and individual companies, should be spending on this programming to get to profitability?
Well, Paul, you've been covering this area for a very long time. I have to wonder if we go back to the fact that just about everybody and their uncle has a streaming service now. And
all you have to do is put a plus after any word, and you can become a streaming service.
That's it.
Anyway.
That's it, Carol. Yeah. No, I think that's the big question. Do we see a smaller pool, and do Netflix and Disney rise above the crowd, and does that help? I will say this, guys, that the reality is the parks business in this period of media transition and advertising cooling is a nice thing to have going for you, with people who have wanted to get back out to the parks and are willing so far, let's see what happens in recession, are willing to pay top dollar to get to the parks. At the very least, that provides a nice little buffer for Disney as they grapple with these big questions on the streaming service for now.
Yeah, you're exactly right, John. I'm just looking at some of the operating profit segments here. The parks and experiences and products operating income came in at $1.5 billion for the quarter. Now, that's great compared to the $640 million last year when we were still impacted by COVID to a certain extent. But the estimate out on the street was $1.9 billion. So what that tells me is the business is getting better. But it's hard for, I think, the company, it's hard for analysts to estimate what is a theme park business, what is a media company, what is any company out there, what does it look like on the other side of a global pandemic?
It's going to cost a lot to run, too. I'm thinking about wages and just keeping all this stuff running.
Yeah.
Well, and I'm glad you mentioned global too, because that's something we'll watch. We should point out that it is actually starting to get a little bit closer of the Disney Plus versus Netflix total streaming numbers. I mean, still a ways to go. Disney Plus is at, give or take, 164 million. Netflix is 220 million. But we know that Netflix has this global brand. We know that for Disney, for example, signing up more subscribers in markets like India has been going back, Carol, to your point about the scale story, I think that you can when you're Disney, you can justify a lot that certain other media businesses can't because you are truly global and you're hoping whether or not it's familiarity with the parks or now this Disney Plus brand that you can find, I guess, a few more synergies or a few ways to overlay some of those costs across your different properties. The other part is, we'll see what they say on their call, but we are entering into, yes, a cool down potentially this holiday season, but things are ramping up on the movie side for Disney. We're going to be hearing a lot about Black Panther, the new Avatar film. Those two are the kinds of things that lift a global brand if you can capitalize on the global brand story. Don't get me wrong here. Everything you both outlined is going to be a challenge for the company. We immediately saw that reflected in the stock price, but we'll see what they say as they navigate through this.
Yeah, and I'm curious about that Disney Plus ad-supported tier coming December 8th, like how that changes the needle, and the balance sheet going forward. John, always fun to check in with you. John Ehrlichman, co-host of Bloomberg Markets, joining us via Zoom in Toronto. Quick check, as Paul was mentioning, this stock, we're seeing it trade down in the after hours, down about 6-7% here.
Yep, 7%, yeah.
7%. All right, you are listening and watching Bloomberg Business Week. Carol Master along with Paul Sweeney. Let's get another check on some of the news after the closing bell. On it, Charlie Pellet.
I thank you very much. Want to begin with another big company. News Corp, big media company, reported adjusted EPS for the first quarter that missed the average analyst estimate. News Corp first quarter revenue, 2.48. Estimates there, 2.49 billion. Little changed after ours. As we heard from our John Ehrlichman, Disney reported sales and profit that fell below Wall Street expectations, held back by weakness in ad revenue and higher than expected losses in streaming TV, down 6.7% after hours. By the way, one of 3 Dow members today that did wind up declining. Going to be interesting to see how that plays out in tomorrow's session. So today, the S&P up 21. What a day it was. Volatile session today. We had the Dow up 333, a gain there of 1%, and the NASDAQ Composite Index up 51, a gain there of 0.5%. S&P up for a third day as investors awaited midterm election results. They were also monitoring the sell-off in crypto tokens that wiped out more than 10% from the price of Bitcoin. Bitcoin actually now lower by 11.7%, 18,256. 10-year yield 4.13%. The 2-year 4.66%. Spot gold up at 2.2% today, 17.12 the ounce. Energy, West Texas Intermediate crude down 2.7%, 89.27 a barrel. But natural gas now plunging by 10.3%, 623 per million BTUs on nat gas. Again, recapping Disney after hours, down by about 6.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We'll keep an eye on those Disney shares in the after hours. Well, a Bloomberg story earlier this year found that corporate values do have a market price, specifically noting some studies suggesting that investors punish the valuations of companies that either breach their corporate responsibilities or overpromise on their greenness. So with a historical view on companies and how they pursue profits and purpose, let's get to it with William Magnuson. He is associate professor at Texas A&M Law School. His new book, For Profit, A History of Corporations. He's also taught at Harvard. He is also the author of Blockchain Democracy, and he joins us via Zoom from Austin, Texas. Professor Magnuson, nice to have you here with Paul Sweeney and myself. So tell us about this book. What was your thesis going into it?
Well, thank you so much for having me on. When I first started writing this book, I really didn't have a thesis. My idea was I wanted to explain where this institution, this economic institution that affects all of our lives in so many ways, where it came from and why we created it in the first place. And so I started with ancient Rome. I began looking at where corporations first arose, and the first economic institution that really starts looking like a modern corporation was ancient Rome, where they had something called the Societates Publicanorum. And I then explored it through the chapters, how they evolved over time from ancient Rome, through the Medici Bank, through the East India Company. And I spotlighted these important points, these turning points in history when the corporation truly changed and until it eventually evolved into the institution that we know of it as today.
Professor, in business school, I learned that it was the role of the corporation to maximize profits for shareholders, full stop. Now that seems to be evolving to maybe something broader, maybe maximize the good of the common stakeholders, maybe the common good. How do you see that playing out? Is that really being embraced across corporate America?
That's right. And I think that is corporate law 101, right? Corporate law 101 tells you the purpose of a corporation, indeed the duty of a corporation, is to maximize profits. That said, that is a relatively recent development, right? Before the 20th century, no one would have ever told you that the sole purpose, the only thing a corporation was supposed to be thinking about was profits for shareholders, right? And Elizabethan England, when the East India Company was first formed, it didn't promote itself by saying, we're going to enrich this small group of merchants in London. No, it told Queen Elizabeth that it was going to expand the trade, the international trade of England. When the Medici Bank was formed in Florence, it didn't say, well, I'm going to enrich this small Medici family. It said, we're going to contribute to the flourishing of Florence. And it did lead indeed to the enrichment of that city. And so I think that the idea that corporations are solely supposed to pursue profit is a relatively recent development. Part of it has been driven by developments in the law, right? So developments in the law in the last century and a half or so, corporations have gone from institutions that had to be formed by the monarch or the government, and you had to petition it for a charter, to now it is very simple. Anybody could form a corporation. I could form a corporation in the next 15 minutes if I wanted to. And so that means that corporations no longer have to justify themselves to a government, to a people.
How much of maybe when companies go wrong and things go wrong has to do with companies are in the public markets, publicly traded, and ultimately it is about, as Paul was talking about earlier, making money.
Yep. Yeah, exactly. I do think that a really important theme in the history of corporations is the role of stock markets, right? Until the 1600s, there was no real stock market. The East India Company was one of the founding members of the London Stock Exchange. And so nowadays, they, of course, have become these all-powerful forces. We have shareholder activism. We have proxy contests. They now exert a new kind of control. We see corporations in many ways responding to the demands of shareholders, and there's a big debate now in corporate law and in the public discussion about just how shareholders affect corporations. Do they make corporations turn to more short-term oriented goals at the cost of long-term goals? And so that's one of the big themes of the book, is trying to explore how do we make sure that corporations aren't just focusing on short-term profits, but thinking about the long-term as well.
Well, I guess you need proper incentives there. Is that in order to impact behavior, I would think?
Yeah, I think that it's a couple things. One is you need incentives, right? You need laws, you need incentives, you need economic structures that give corporations reasons, real tangible reasons for thinking not just about the short term or not just about shareholders, but also about other long-term constituencies. But you also need a cultural change, right? I think that historically, we have thought about corporations in terms of civic common virtue, right? We want corporations to be contributing to the common good. And I think that in order for corporations, and particularly corporate executives, to have that in mind, we need a change in the expectations, the cultural expectations of them.
All right, we're going to continue with William Magnuson. He's associate professor at Texas A&M Law School. He's got a new book out. We're talking about it. It's entitled For Profit, A History of Corporations. We'll come back in just a moment. In the meantime, watching shares of Disney sinking down about 6% in the aftermarket. This after earnings trail analyst estimates. And we're finding a lot of those streaming investments are really eating into profits, even as subscriptions rise at the likes of Disney Plus and so on. We're going to continue to monitor right here on Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Well, I've got to say, you go through this book, we're talking to the author, but you've got Mark Zuckerberg in it, you've got KKR, you've got Ford. It really is a history of corporations. It's called For Profit. William Magnuson is an associate professor over at Texas A&M Law School. We're going to get back to him in just a moment.
I'm still trying to figure out what a Texas A&M professor is doing in Austin, Texas. I didn't think that was allowed.
We're going to ask. All right, let's get back to a bunch of news, earnings news after the closing bell. Charlie Pellet is on it. Hey, Charlie.
Thank you very much. We're talking corporations in this business update here because Disney reported sales and profit that fell below street expectations, held back by weakness in ad revenue and higher than expected losses in streaming TV. Disney, after hours, down by about 6.5%. News Corp reported adjusted EPS for the first quarter that missed the average analyst estimate. News Corp first quarter revenue, $2.48 billion. Estimates there, $2.49 billion. Also, Robinhood plunged today. Robinhood markets down the most in more than a year after Binance Holdings agreed to acquire Sam Bankman-Fried's troubled crypto exchange, FTX.com, which had been considered a potential suitor for the trading platform. Robinhood shares today plunging by 19%. On up day, those stocks are gaining for a third day as investors await midterm election results and monitor that sell-off in crypto tokens. Bitcoin down 11.6% now to 18,282. The S&P up 21, up 0.6. The Dow today up 333, up 1%. NASDAQ up by 0.5%. The 10-year yield 4.12%. Spot gold up 2.2%. 17.12 the ounce. West Texas Intermediate crude down 3.1%. 88.93 a barrel. It was an up day on Wall Street. Marianne Bartles is chief investment strategist at Sanctuary Wealth, and right here on Bloomberg Business Week, she told us about investment advice that she once got from a family member.
Something that I learned many, many years ago, actually from my aunt that went to Wall Street in 1956. And what she always told me, when a market is in a bear market, you eventually start seeing the leadership emerge. And that's what's happening because, yes, if you own tech stocks, it feels really bad. But if you own energy, if you own some industrial stocks, if you own select healthcare, you don't feel like you're in a bear market.
And speaking of Wall Street, Citigroup and Barclays have started eliminating jobs in their investment banking operations, joining other major banks in responding to plunging revenue from the business. Recapping, we've got Bitcoin down by 11.5%, S&P up today by 0.6%, Disney after hours, after earnings, down by roughly 6.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pello, thank you so much. We appreciate it. I think what I'm learning from Charlie's reporting after hours here, if you're a company and you miss earnings in this market, you're going to take you out to the woodshed here. This is tough out there. I'm thinking Lyft and some of these other names. So,
well, the bar was brought down, right? So if you're missing
I thought the bar was pretty low, but apparently not. All right, let's get back to our guest, William Magnuson. He's associate professor for Texas A&M Law School. He's author of a new book entitled For Profit, A History of Corporations. He joins us via Zoom from Austin, Texas. So, Professor, I'm wondering, given your research here, fast forward to today, are there any companies that are doing it right or industries that are doing it right in terms of maybe expanding how they view themselves within their markets, within society more broadly?
Yes, well, it's hard not to think when you think about a corporation that is considering all the factors, right? Not just shareholder profit, but also other features, the environment, workers, the country. It's hard not to think about Patagonia, right? Patagonia is obviously the outdoor equipment maker and clothes maker, but their founder has always been deeply committed to promoting not just the interests of shareholders, but also thinking about broader constituencies. And so I think that type of corporation, a corporation that has in mind not just their own independent small fiefdoms, but increasing the flourishing of their society and their community as well, those kinds of corporations, I think, are the ones that are going to succeed long term.
Why aren't there more Patagonias then today?
That's a very good question. I think there really has been a cultural shift now. We don't expect corporations to have those kinds of goals, right? As we mentioned earlier, today It is sort of corporate law 101 that says that corporate executives not only should be only thinking about profits, but they actually might even have a fiduciary duty to only consider profits. And so I think that is part of it. There's pressure on executives to say, well, I can't frame my business strategy in terms of anything but shareholder profits. And so my book in many ways is to explore how that shift came about. Why did this happen historically speaking?
You know, environmental, social governance, ESG investing, that's become a bigger part of, I think, the investing landscape. Do you think, and you know, do you think shareholders may be able to affect some change here? As even BlackRock, the biggest, you know, asset manager out there, is really pushing its managers to incorporate ESG.
Yes, ESG is going to be an increasing trend, I think, in the history of corporations. I've always thought that environment makes a lot of sense, social makes a lot of sense. Governance, I think, is sort of an outlier here, right? The idea that we should be improving the governance of corporations doesn't quite seem like the environment and social causes. That said, there's going to be increasing pressure. We've already seen increasing pressure on corporations to be considering these other elements. Part of the problem, though, with the current ESG movement is that they've been struggling to find real metrics, right? It's hard to find a metric to say, well, this corporation is doing better on ESG than this other one. That just doesn't make a lot of sense currently.
So history isn't always a guide for what's to come, but based on what you've learned about the history of corporations, where they came from, where they went, can you get any indication of kind of where they are going ultimately longer term? Especially, I think with Paul, you know, Paul and I, we talk about it all the time, about all the money going into ESG. You would think that might have an impact in terms of companies' initiatives and being maybe more purpose-driven as well as profit-driven. But where do companies go from here ultimately?
Sure. I think that the message that I take away when I examine these historical corporations is that humanity works best when it works together. Right? Corporations are these tremendous vessels for improving economic efficiency, for producing goods, for responding to the demands of consumers. Right? They're this tremendously efficient vehicle for doing that, but they also have these flaws. And so each generation, we have a new type of corporation. I think we're currently living in the age of the startup, right? The Facebook world, the Twitter world, and we're starting to see some of the downsides of that startup world, right? We've got Twitter engaging in all sorts of difficult content moderation questions. We've got Facebook involved in election disinformation. And so we're going to be seeing a lot of developments in the legal world in the next few years, and I think we'll also see developments in corporations as well.
All right, really appreciate it. William Magnuson, associate professor at Texas A&M Law School, his new book, For Profit, A History of Corporations. I did just want to do a rehash and recap, if you will, of Disney. It is down about 6% in the after hours. Earnings trailing analyst estimates, major streaming investments eating into profits, even as subscriptions rise. Theme park business grew, but inflation weighing on consumer spending. And then you've got something like Affirm, which is down, Paul, about 19% in the after hours as it cuts its fiscal year revenue forecast. So
yeah, there's an example. Maybe, you know, we had some recession coming into their forecast.
Have a good evening, everybody.
Let's head down to Nancy Lyon. We'll get world and national news from Washington, D.C.
Thanks, Paul. Polls are still open across the U.S. with control of the House and Senate up for grabs, along with the fate of President Joe Biden's agenda. Officials are on the lookout for disruptions or possible violence. An Illinois county clerk says a cyber attack against its computer systems is a strategic and coordinated effort to undermine the democratic process. There have been some voting machine outages in Harris County, Texas, causing long lines and delays. Pollster Frank Luntz tells Bloomberg he's keeping an eye on other possible disruptions in races.
I'm concerned about Pennsylvania in general, Philadelphia in particular, and I'm concerned about Arizona. Those are the two places where the greatest degree of upset about how the votes are being cast and how they're being counted. Those states are very close, and I think this could go on for days.
Frank Luntz says he is nervous about the state of our democracy. The Department of Justice sent monitors to several jurisdictions to keep an eye on today's election, but the Republican-led state of Florida is rejecting that oversight, saying it's an unnecessary federal intrusion. Missouri is also rejecting DOJ personnel. Florida's produce industry took an almost $2 billion hit from Hurricane Ian, and now it's bracing for more as Tropical Storm Nicole moves toward the state. With hurricane-strength winds, Nicole could be putting Florida's $19.8 billion produce industry at risk. That's according to the International Fresh Produce Association. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Master, Paul Sweeney. We're watching some of the earnings after hours here. Affirm Holdings, by the way, cutting its revenue guidance for the full year. The guidance missed the average analyst estimate, so it's now looking for 2023, the year forecast revenue of $1.6 billion to $1.68. It had seen $1.63 billion to $1.73 billion. Affirm, Paul, is down about 18% aftermarket.
Yeah, it was down 85% year
It's
to
like
date so far. How much more can it go? But I mean, those fintech companies, highly valued. Those are the companies that are really at risk. If you're talking about a rising interest rate environment, some of the valuations for some of those tech companies, including the fintech companies, really at risk.
Really good point. All right, let's talk about Disney, because it's down about 6% in the aftermarket. Earnings did trail analyst estimates, but that subscriber number, right, it was what everybody was hoping for.
Yeah, the company beat expectations for streaming subscriber additions in the period, signing up 12.1 million new customers for its flagship Disney Plus services alone. Total subscribers, including those for Hulu and ESPN products, rose to almost 236 million. That's over just the last 3.5, 4 years. It's just amazing. So good numbers on the subscriber. But again, how do you get subscribers? The way you get subscribers in the streaming business is you spend a lot of money on programming and you put some cool stuff on the air. Well, that cool stuff costs a lot of money. And you think back, prior to the streaming business, Disney, across all of its cable networks, Warner Brothers, across all of its cable networks, their programming budgets were $2-3 billion a year. Now they're 15.
They're huge.
17, $18 billion. And the revenue hasn't grown to cover the incremental costs. Ergo, the losses we're seeing from a lot of these streaming companies. So the question becomes, how quickly can you grow your subscriber base to generate the revenue to cover the cost? And that's kind of where we are. We saw this model with Netflix. And in their mature markets like North America, they're very profitable. But in their startup markets, they're not. And so that's kind of where we are with the Disneys. And Disney's 4 or 5 years behind Netflix in terms of the curve here. So they're still saying they're going to break even this fiscal year.
I'm waiting for the kind of streaming shakeout. By the way, Bob Chapek saying over half the dates for Mickey's Very Merry Christmas at Disney World, they have sold out.
Boom.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Lots of focus on entertainment stocks after ours, and this update is brought to you by SEI, with an operating platform designed to support all major asset classes, diverse strategies, and investment vehicles. SEI is redefining wealth management. Learn more at SEIC.com/tech. We heard from Disney, News Corp, and AMC, which is the largest theater chain in the world. It's out with results posting higher than estimated revenue and attendance of 53.2 million. That's about 33% higher than a year ago. CEO Adam Aron says Black Panther Wakanda Forever will drive more business this quarter. Shares a little change right now, down by about 0.6%. Disney reported sales and profit that fell below Wall Street expectations, held by weakness in ad revenue and higher than expected losses in streaming TV. Shares after ours down 6.4%. News Corp first quarter revenue $2.48 billion. Estimates there $2.49 billion. Choppy day today. In the end, an up session here. 3 in a row for the S&P, up 21, up by about 0.6%. The Dow today up 333, up by 1%. And on this election day, NASDAQ up 51, a gain there of 0.5%. Investors also monitoring the sell-off in crypto that wiped out roughly 11% of Bitcoin today. We had the 10-year yielding 4.12%. Spot gold up 2.2%, $17.12 the ounce. West Texas Intermediate crude down 3.4%, $88.66 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I did kind of sign off earlier. Forgive me. I've realized we have one more segment to go. It's kind of that kind of a day. Do you want to talk about Gibson's Ukraine relief guitars? Because they're going to be part of an upcoming Julien's auction. It's called Guitars for Peace. It started on Friday. Bidding began actually last month. Yep. It's all part of Julien's Icons and Idols Rock and Roll 3-day live auction and online at the Hard Rock Cafe in New York City. The goal to raise awareness and funds to aid the people of Ukraine. And so right now at the Hard Rock here in the Big Apple, Martin Nolan, he's executive director and CFO of Julien's Auctions. He's surrounded by some really cool items up for auction, which you can see on YouTube and you can see on Bloomberg Quick Take. And for you guys on radio, we'll describe them. Julien, how are you?
Yeah, incredible, Carl. I was wishing that you.
I mean, Martin. Did I just say I called you Julien? Sorry, Martin. How are you?
Martin, how are you?
Oh no, what happened? Martin, we got you there, buddy. It's the problem with Zoom, so we'll see if we can get back to him.
Oh wait, do we have him? Martin, can you hear us?
Yeah, here, Carl.
Okay.
Yes. I was wishing you were here, but it's this week at the Hard Rock Cafe in Times Square. The auction, of course, is taking place Friday, Saturday, and Sunday. Over 1,500 items going on the auction block, all of the greats included. And yes, those guitars, Gibson Les Paul guitars, custom made for Ukraine relief, for humanitarian efforts in Ukraine because of the war and the suppression by Russia on that country. There's a great guitar there in yellow and blue, the colors for Ukraine, played by Paul McCartney during his summer concert tour this year. And that's an incredible piece. And also there's a great guitar from Slash, with Slash signature played by Slash on stage, and Doodles from Slash as well. So again, really great cause and beautiful guitars. They're works of art.
Martin, how much do you expect to raise during this event?
Yeah, so the weekend, we're expecting a range of 3 to 5 million. Keeping in mind, we have over 1,500 items with, all of the greats, Don McLean, Steve Vai, we have Elvis, Prince, Michael Jackson, Little Richard, Kurt Cobain's guitar, you see it in the background, Amy Winehouse, Madonna, Cher, they're all here. The Ukrainian relief effort, we have 5 guitars. People are typically very generous when it comes to raising money for charities, especially something like the efforts in Ukraine. So I don't know, the sky's the limit on what those guitars could sell for. They're so iconic, and then you weave in Paul McCartney or Slash or any of the celebrities that play them in support of the effort with Gibson. It'll be interesting to see how it ends up this weekend.
Well, talk to us about some of the value of some of these items, Martin. That's where it kind of gets kind of interesting. You've already got some bidding underway. What kind of numbers are we seeing? What kind of numbers are you expecting for some of maybe the bigger items?
Yeah, so incredible. So we've seen since the pandemic, and you and I, we spoke about this before, Carl, about the level of interest. It's increasing significantly in collectibles, especially rock and roll. Record numbers of people are flocking to our website to register and be a part of the auction. So the Kurt Cobain guitar, remember we spoke in May, we sold that guitar from Smells Like Teen Spirit video for $4.5 million. Well, we have this guitar from 1989, just after their first album dropped, which was Bleach, and then they went on tour, small venues throughout the United States. The guitar behind me that was smashed, you see there, was played, it's a Fender, of course, played in Chicago, and then in Williamsburg, Pennsylvania, where Kurt Cobain actually smashed it. And on there, he's written, you know, if you can't have rock and roll, well, throw my ass in jail. That speaks to Cobain, what he was, what grunge era represented. Estimate on this guitar, 200 to 400,000.
Wow.
That's conservative for a Cobain. But you have the Prince Cloud guitar, you have items of clothing, you have the amazing Vincent guitar, the Martin guitar that Don McLean used when he wrote Vincent and recorded Vincent. We also have the original lyrics from Vincent, estimated $1 million on that piece. That's incredible. Again, people are looking upon owning tangible assets from the icons they know, great conversation pieces, and in years to come, very likely will continue to appreciate in value. And while the stock market is in flux, and real estate is in flux, and the bond market is in flux, Bitcoin is in flux, you have something cool, something that you love, and chances are you'll also made a good investment.
Martin, who's a typical buyer of these types of items, typically?
Museums love to own these three-dimensional items, of course, because we can all relate to them, and so it brings people through the doors of museums. Businesses love to have these items, again, the cool factor. Investors, and of course the fans. Now the fans obviously have limited or may not have the huge wherewithal to own some of the really iconic pieces. But the nice thing about this auction, Paul, is that we have items at every price point. Items ranging from $200 to $300, $2,000 to $3,000, and then $200 to $400,000, like the Cobain guitar you see behind me.
Hey, one thing I want to know, Martin, is like, what is it that really you're seeing a lot of bidding for? I mean, as you mentioned, you got Amy Winehouse's Beehive hair topper. You've got LL Cool J, custom painted coat. You've got a bunch of Elvis Presley stuff, and I'm curious about like Presley. Like I always feel like people step up a big time. Where's a lot of the bidding action right now?
Yeah, so already, Carl, we have over 4,000 bids have been placed in this auction. Incredible record number of bids already. The auction starts on Friday, live here at the Hard Rock Cafe, New York City. Elvis Presley's watch, that's a beautiful gold watch with diamonds, of course, over the top, as you would expect from Elvis Presley. That's getting a lot of interest. But there's so many items. The guitars for Ukraine are getting interest.
Good.
Don McLean's items are getting interest. Steve Vai, over 300 items from his collection, especially his guitars, getting huge interest. But again, this is all just building up to the actual event. History will take place this weekend when the gavel goes down. We reach record prices, and these items dispersed all over the world. 1,500 items. Last time these will be together, they're going to go all over the world to fans, collectors, and museums.
Martin, we got to wrap it up, but really appreciate you spending some time with us. And as we mentioned, this is going to raise awareness and funds to aid the people of Ukraine. So the money going to those efforts. Martin Nolan is Executive Director, Chief Financial Officer, Julian's Auctions, via Zoom from the Hard Rock Cafe in New York City. So check out that auction this weekend. Some cool items. Not so cool, certainly if you're trying to be a bull, on shares of Disney, down about 6% in the aftermarket.
Yeah, a little bit of disappointment there, but they are staying on track for their streaming business.
All right, be sure to stick around. Lots of election coverage coming your way on Bloomberg Radio and Bloomberg Television. For Paul Sweeney and the whole Bloomberg Business Week team, nice guitar music there to take us out.